Psalm chapter 73, verse 26. My flesh and my heart may fail, but God is the strength of my heart and my portion forever. Psalm chapter 27, verse 1. The Lord is my light and my salvation. Whom shall I fear? The Lord is the stronghold of my life. Of whom shall I be afraid? Habakkuk chapter 3, verse 19. God, the Lord, is my strength. He makes my feet like the deer's. He makes me tread on my high places. To the choir master with stringed instruments. Deuteronomy chapter 20, verse 4. For the Lord your God is he who goes with you to fight for you against your enemies, to give you the victory.
Yo, good morning, everybody. Got a good amount of stuff to talk about today. Hope your weekend's been going okay. But yeah, got some pretty interesting price delivery, pretty interesting developments in the world. So we'll just get right into it, shall we? So as I always do, I like to show this outline for those that may be new. So this is pretty much, the process that we utilize all throughout the morning for the rest of the week, right? It's our projection weekly analysis process. Good morning, Jen, by the way. Good morning, Z. Good morning to everybody. But yeah, so this is an outline for those that may be new. It pretty much just shows what I look at. These are very particular things that I have on this PDF, okay? It shows you what I'm looking at for my clarity framework, what I utilize in terms of analysis on these different assets. And again, each one has its place. So yeah, if you haven't screenshotted this, this is essentially giving you everything outlined in terms of my weekly process. There's obviously nuances for every topic, but in a nutshell, like the overview, like overall process that we're doing, it incorporates all these different components. Okay. So take a screenshot of this if you haven't. If you don't know how to map out the start of the week, I mean, I do it every week. I show you the whole process, but you also have this to kind of accompany you as you try to, learn that process. Okay. So definitely take a screenshot of that. But outside of that, if we get started looking at the news for the coming week, looks very uneventful. So yeah, what's happening after this week? Things start to pick up. So this Jackson Hole Symposium, it's definitely something that you got to keep tabs on, because that thing does not make the market nice. Okay. You kind of want to think of it as like NFP, FOMC type of characteristics. Oh shit. Because a lot of times, I'm not even 100% sure what this really is, but I've heard ICT talk about it and said that it's similar to NFP, something to watch your risk on, because, just read what it says right here, right? Central bankers, it's all these, big wigs in the industry that are kind of talking about policy, right? Different things that go on. So there's a lot of big things that can come out of this. I'm not sure what the prelim benchmark. So after this coming week, we're gonna have a lot more, news manipulation and volatility injections. Obviously, we'll still be able to find something this week, but seeing that there's a lack of news on majority of the week, only 2 days has news. Let's go to the trading terminal. Tuesday. So there is some stuff happening. Import prices, that's important. So there may still be some stuff that goes down. There's some with the 2 dots. So it's a pretty impactful news event. It's not like anything crazy or anything like that, but still good to identify. And Tuesday we have these 3 dots. So that's going to be important. And so Monday we have a couple of announcements. Again, it's not going to be anything too crazy, obviously, but we might have some volatility injections right around the open, right, the bull market open. But aside from that, let's look at earnings that come this week. We got Walmart on Thursday. It's going to be kind of interesting. Target, Lowe's. Those are all consumer staples. So we don't really see much tech announcements. Oh, Palo Alto. It's a very important company. So maybe Monday, maybe has an impact. I think Palo Alto Networks is in the NASDAQ, if I'm not mistaken. I could be wrong. They're a really, really, really strong technology company. I'm from this area, or close to it, over there in the Bay Area. But yeah, not too much of an exciting week when it comes to earnings either. So again, these 2 resources are showing us that we may have somewhat of a slow week next week, or this coming week. Okay, so again, obviously we're able to still map things out. Well, what does this tell you? What does this information help you with? It helps you understand that it's time to lower your risk. If you have normal risk all the time, around weeks like this that have very little economic news, you gotta lower your risk. Okay. Let me see, weekly market recap. Tech leads as precious metals shine. Maybe I'll actually pull up gold. I've been hearing a lot about gold. I think my analysis, assuming that it was going to go higher, I think we've been justified and proven correct. Let's go see Okla. I've been talking about this company for a long time. Those that like long-term investing in stocks, I know we're here to talk about the other assets, but if you're a long-term investor like I am too, you want to stretch your skill set and be damn near a fund manager for yourself, build like a personal ETF, which is what I call a retirement account, because we're self-directing it. It's basically building an ETF, right? Hopefully somewhat diversified, protected long-term ETF. Or I mean, it kind of depends on your strategy as well. Do you like to be aggressive? Do you want big gains quickly, or do you want a mixture of like dividends and growth as well, right? Really just depends. But this is a nuclear reactor company. They make custom, personal sized and commercial sized nuclear reactors. They're portable. There's not many companies, if any, that are competitors to them. I think there's maybe one. I think they're called SMR or SMH or something like that. But there's also a couple others called one called Constellation Energy. So a lot of energy is a bottleneck in AI, right? Energy and chip speed. They already have the manufacturing for chips, but they're obviously going to amplify it. But there's energy. So if you're a long-term investor, this ain't financial advice, obviously, but it's kind of the stuff that I'm looking at. One of my mentors talks about data, compute, and energy as the energy triad. So for the future, because we have we're experiencing one of the biggest build outs ever in history about a specific sector or technology. It's kind of like when the railroads were laying the rails when it first came out. You can imagine there was a ton of opportunity at that time. Well, this is the technology railroad, right? Things are rapidly changing, and companies like Oklo, I think, are going to shine because that's part of the bottlenecks with AI. It's energy. The only thing that can sustain is nuclear power, right? Because, especially with the attack on oil and gas, all the drama, all the chaos and wars and shit like that. So I'm looking at Oklo. But aside from that, let's go look at gold real quick. Let's pull that up at least. Yeah. So the initial objective of this going higher, pretty much everything that was mapped out in terms of this going higher, right? If it was to break these levels in here, displace, which we finally got the displacement here. Once it got up there, you see the exclamation mark. I pointed that. I've had that for the last like 2 weeks since I've been asked about gold. So it looks like we were correct on that as well. When we were down here, first target was right there. It reached it. Said if it fails in here and gets above this high, we'll probably reach for this. And then we got above this high. And now it's completely turned the cells off, right, by reaching up through this high. So now I'm looking at market maker buy model, unless this gets taken out. Okay. There's a whole lot of everything up here, so I kind of want to clean that up. Okay. See, that's gold. But again, hopefully everything makes sense about the news. Again, it's going to be a time when you lower your risk. It's not a week to go crazy. It's not a week to buy like 50 funded accounts and try to pass them all in a week. We may get some nice moves because, who knows what happens, right? A new headline could come out, a bomb can drop, a war could begin, a war could end. Something can happen that could spike inflation or do some dramatic stuff. We're in massive black swan season because anything can happen. There's a lot of uncertainty. But obviously, we're seeing the stock market kind of recover, creating new all-time highs. I think that'll be the next thing for the indices, but we'll see what happens. We'll dig into that a little bit later. So yeah, when it comes to the bonds and yields, we do see that we're still somewhat range bound, but we have gotten into this fair value gap. I talked about if this low gets taken out, that would set the stage for this. Obviously, it failed to do so, and now we're respecting the inversion fair value gap on the yields. That's generally going to be bullish for the dollar when we see things like this. Obviously, it's not necessarily the case. There's clearly a big crack in correlation when it comes to the bonds and yields. Seems like and the DXY, right? Seems like the DXY is kind of following the bonds. But then again, the bonds, which impacts in a positive correlation the foreign currencies and the indices, and it's reverse correlated to the dollar. This asset is clearly sideways. So we got kind of a lackluster ability to move in the bonds and yields, and we have the dollar kind of stuck in a range, and we have no news, and Congress and I believe the Senate as well is on vacation, which I don't know why the hell they have a vacation. They have a country to run. But it's kind of the way it is. But all these things considered, and the fact that we're still in the summer months, we're in August, also getting closer to the end of the quarter, all of these things promote the fact that the current condition is a little bit more tricky. It may seem like it's a little bit more tricky. Obviously, every week, we're able to still define what it's going to do, clearly. But then again, I've been here before, right? I've been in circumstances like this, and I've seen this type of characteristic happen across the different assets multiple times. So my expectation and anticipation of what's going to happen potentially and what the conditions may be, based on my experience, I think that it's advisable to lower your risk. Okay. Again, this ain't financial advice. I don't encourage you to do anything that I tell you to do or teach you about. But if you see the stuff work and it makes sense, you can make your own decisions, right? But when we're talking about the bonds and yields, again, this thing is kind of holding in here. So because we closed above this, once it closed above this, that set the stage for this to potentially hold if it can continue to do what it's doing here. You can also see that the yields have a rejection block here. Come on, come on. So that rejection block, right? We got an order block. We have my wick model that I teach you guys in my private group showing up right in here. Got a PD array. Okay. Got that wick showing nice characteristics of it holding. And then we got these equal highs up here as well, right? So the next candle for this next week, I'm expecting if these highs are going to be taken, I'd like to see it open up, give us a bullish power 3 by dropping into this order block, holding that midpoint, never coming back to this wick. If it does come back to this wick, it's got to stay in the upper 25%. It's got to be very reactive to the rejection block. Otherwise, if it doesn't do that, if it does not come down and respect this, it may fall through. And if we take out this low, I'll treat this low and this wick as a balanced price range. Then we have a reclaimed inversion fair value gap to be basically a bearish fair value gap. And then we'd look to target this. If it takes that out, then we look for these lower levels. Got the order block here. We have the low. We have another low there. It's a daily low. And then we got the trend line liquidity. So for a contingency plan against this going higher, and kind of validation areas to look at, it's going to be this low. We have, if you think of our validation principles, right, our 3 PDA rule, we're on the daily chart. It looks like it's going higher. We're creating higher lows, higher highs, higher lows, higher highs. We're respecting bullish PD arrays. Balanced price ranges bullish are being respected. We got the bonds looking like they want to go lower. Just looks kind of like a bear flag, honestly. Equal lows, trendline liquidity. But we have these equal highs up here. So if we were to get this thing to fall through this low, that would put my attention to these equal highs for the bonds. But for now, we're going to go with what price is telling us, right? We don't just assume or try to predict too much, right? We can only predict essentially, or should only predict, or look to predict the next couple of candles or the next week. Obviously, we're able to showcase the fact that we're able to call things months in advance because I'm on the quarterly chart. I look at the really big time frames. But for a new trader, you really just have to understand what the next candle is going to do, whether that's a daily candle, whether it's a weekly candle in a weekly range, and what's in close proximity to where price is at. You don't got to worry about this for now. You don't got to worry about all this for now. The main focus is just what's inside this range, this high to that low. Because in order for us to get up here or to get down here, it's got to break out of that range. So doesn't it make sense to only keep your focus, at least early on, to what's close to you, right? And if you do this for the daily candles and just observe the daily highs and lows, every new candle that forms, you look at the previous 3 days highs and lows, or things that are in close proximity like this. It's a previous week's high, and we got a previous week's low. I think you'll find that you have unlimited setups to find, unlimited frameworks to utilize, and something to do every single day. Okay, so again, getting back to invalidation principles, right? If I was going to stop being bullish in this market, can you guys in the chat tell me what 3 PD arrays you guys see here? What 3 PD arrays below where price is currently at can you see? Yeah, I'll pull up crude oil in a little bit. But yeah, let me know what you guys see in here. If we're thinking about the 3 PDA rule, what 3 PD arrays are below this candle where we're at currently that would then justify basically invalidation for this to be bullish, right? And turn on our invalidation process. Can you guys mention it in the chat? Let me know. Want to see what you guys see before I point everything out. And if you guys get value from the channel and what I do, don't forget to like the video, subscribe to the channel. It's free. keeps me motivated to do these and not just be with my private group. Okay, bullish. So inversion for value gap. Larger 3 candle order block with a smaller order block as well. I think you're talking about these. Okay. Bullish order block, inversion for value gap in the low. Exactly, Mike. Perfect. Exactly. Perfect. Okay, we got this low and this low. The inversion for value gap that needs to hold. And we also have that bullish order block resting right here. We also, like I just mentioned, have that rejection block in there. All right. So you can imagine if this goes lower and we want it to go higher, these levels need to be respected, because if it doesn't do that, just think about what you'll see in price. It would be like something like this. Does that look like it's overwhelmingly going to try to get to the highs if it does that? If we're not showing any respect to this, especially if there's a closure down here, right below that inversion, that's what triggers the inversion, is when we get a closure outside of, in this case, the low part of it. Okay. So that's our 3 PD arrays. If we were bearish, right, and say price dropped, lower like this, came down, took out this low here, aimed at these, in order for us to be bullish again, maybe there would be another fair value gap here, right? Breaking down like that would turn this to a mitigation block. And then maybe there's a swing high in here after it retraced a little bit. And then my 3 PD arrays outline, we'd have a wick, we'd have a high, maybe a fair value gap in there, we'd have a breaker, right? This high, low, higher high, but then also you take the major high here, high, low, failure swing, breakdown. So you'd have those levels, and then when price retraces, you'd expect it to retrace only. You'd map this out as a BPR, and then you would go from there, right? This would be a change in state of delivery once it gets below here, so on and so forth, okay? It's a very simplistic way of viewing validation and invalidation, right? Whether you should hold on to a trade or a bias, or if you should adjust, okay? And it has, again, it's 3 PD arrays, and you just take where price is currently at, whatever the time frame is that you're looking at, and then you map out what are 3 PD arrays below us that should hold price if we're bullish, and what are 3 PD arrays above us if we're bearish, right? And that would become your line in the sand. All right. And of course, the higher time frame is key when it comes to this, because that'll validate a longer term perspective. If it hits 3 PD arrays here, the overall sentiment may change and want to go lower overall for the next couple of days. If you do it on the weekly or quarterly chart or monthly chart, could be for the next couple weeks, months, and maybe even the next quarter or the next 2 quarters, depending on what's happening, right? And what time frame you're looking at. And then when you're on the lower time frame, say this was the 5-minute chart, and this inversion fair value gap was what you executed, it'd be the same exact thing, right? It'd be the inversion, the low, the order block, the rejection block. So it's 4 PD arrays. And we wouldn't want to see that get taken out. And if it does take it out, because we're on the lower time frame, you'd have to watch what the response is from that low. Is it just wicking through it to then get back above our levels? Because that happens sometimes on the lower time frame. But because it happens on the lower time frame, does that upset the narrative on the higher time frame? Absolutely not. Okay? You got to be able to segregate these things and then pay attention to it, because each time frame has its own validation levels. Let me see. Could it also be advantageous to keep track of the various market maker model stages? Oh yeah, it's 100% a given, 100% of the time, right? You want to have your market maker buy and sell models outlined, because I have a process called the market maker model flexibility protocol. I think I've shared a little bit of it here on YouTube, but it's a way to validate a particular market maker model and give you a pretty solid sign that, we're in line with the other one, right? It's going to go the other way. Okay. So, yeah. So definitely it's advantageous to always keep track of power 3. It's very advantageous to keep track of the market maker model phases. I can tell you this, if I don't have that outlined, if I can't determine where we're at for the power 3 and or the market maker model phases, I don't have a trade setup. That's like a very strong rule that I have. If I cannot determine, it's like one of the first 5 rules that I go off of when I make a decision. If I can't determine which market maker model I'm in, or what phase I'm in, or which type of power 3, or what phase we're in when it comes to the power 3, on any whatever time frame I'm looking at to take an execution on, I'm not going to take a trade until I can define that. Ashley, I've definitely been swing trading a little bit recently. I'm getting into options, so I'm going to also be an options trader. But everything that I do, given the higher time frame, um, even if I didn't like swing trading, it's still advantageous because we're calling moves the last weeks, months. So I would say I dabble with it. I've taught 6 swing traders using the same process that I talk about, right? And same process that I use, or well, I guess similar to what I use on the lower time frames. Just transfer it up to the higher time frame because everything's the same, right? This 3 PDA rule, it's the same for every asset, for every time frame. But yeah, let me see. Look at the last video. Oh, nice. Yeah, the market maker model traders, I respect him a lot. He's another charter member. Yeah, he's awesome. Yeah, I'll go check that out, see what he's been talking about. I'm not at a phase where I really want to learn much. I don't think I really need to anymore. A lot of this stuff just adds complexity. You guys will get to that point as well. And I can help you define that. Because you don't want to be just a forever student constantly when it comes to your process if you find something that works. Because most of the time, I've seen this as a mentor myself. It's also happened to me in my journey. And also ICT has talked about it. I think the market maker model trader and many of these big traders in the ICT camp have also talked about it. But if you just get stuck in this forever loop of I need to learn every single concept, you're going to get to a point where you do in fact have too much information you're trying to cram into a decision. Just like if you try to use too many models at once, or if you have like too many perspectives being pushed into you, it could really, really fog the lens. So you want to find things that obviously make sense to you, that make it so you can identify how to take a trade, where to take an entry, managing risk, how to determine bias and narrative, how to validate, how to target, understand the different frameworks and the ins and outs of how to navigate through price from time frame to time frame. And anything in between is obviously extra, but if you can master those things and your trading psychology and have a process around all these different components, you really don't need to add more. Having more mentors is not necessarily the greatest thing. Having more concepts, too much concepts, is a thing, right? It is a problem in many cases. But that's why a community like this, a community like the market maker model trader has, a community like one of my friends CJ has, is so important, right? Because you're able to get one specific perspective and be able to filter out a lot of the different complexities. Because I don't have to have 20 different entry models to be able to execute. I don't have to know every single PD array, right? It's good to be aware of them, but in terms of execution, you want to settle in on 1 or 2. I have 6 because a lot of the stuff that I do works within one another. So if I find like a breaker, I know the 2022 model is probably there. I know the Razor model I teach is there. I know the Wick model is probably there in some capacity for continuation, so on and so forth, right? The mitigation blocks, I like those too. But a lot of it works together. And same thing with the framework, right? Everything that we do will come back to Power 3 and market maker models. Everything that you try to learn, every opinion that you get in the ICT space, pretty much every one of them. I mean, look at the name of the trader that was just mentioned, the market maker model trader. There's many that only look at things from a Power 3 lens, but a lot of times things fit together. So if there's a Power 3, what do you see in a Power 3, right? It's accumulation, manipulation to a PD array or liquidity, distribution, rebalance, and the redelivery, right? What do you see in here, right? You see a market maker buy model. You see a market maker sell model to get down through the lows and target the PD array. And then the retracement creates a failed sell model. It has like breakers and whatever too. But then again, it creates another market maker buy model. So it's really this simple, right? It's really this obvious too. When you submit yourself to this and try to get away from thinking that you need all the concepts that's ever taught, all the new stuff, all the PD arrays that come out, like it just puts you on this journey to forever learning. And at some point you gotta, you know, pop that cherry and just start focusing on your one process. You know what I mean? You got to focus on a very organized, simplistic process. Okay, and it's very difficult to do it when there's so much, and we don't have the experience or never got this type of guidance or perspective. It's very easy to fall into the lens of like, okay, I got to learn everything, or I'm not gonna have everything I need. I'm gonna be missing something because a new video came out, and you know, I'm already learning all these other things. I'm already confused, but maybe if I watch that other video and add more to the thing that's already not making sense, maybe it'll start to make sense. And that's just not the case. It's actually a hindrance over time. If you do find something that does work and you keep trying to add to it, the moment you have something that works, when you try to add to it, if it's something that's totally outside of what you do, you're going to now screw the whole process up, right? This happened to me when I was first gathering profitability, which is what led me to go invest in two other mentors that are in the ICT charter camp. And they literally told me this. They're like, you're adding too many things. You're trying to look for too many models. You have enough information, because what I was sharing with them about what I understand, they were able to determine that I already have enough. I can make decisions, but it's just the analysis paralysis issue that comes from having too many things. It's a real thing, you know, and it seems kind of counterproductive because, you know, at first we're struggling, and a lot of times we make the connection with not knowing enough of the concepts with why we're unprofitable or why we're not able to have consistency if we do find something that, you know, over time does look like it works. So there will be a time in your journey where you're going to want to stop learning and use what you have, right? And learn more about those things that you already have. Like for you know, my opinion, I share this all the time, but I'm going to do it again because this is a very relevant issue. Let me see if I can find it real quick. Just bear with me. But this is stuff that people don't talk about, especially these mentors, right? Mentors. Um, they try to get you to think that you have to be learning. ICT said that his whole approach to marketing, that was part of it. You know, like let me make them feel at first like they can't leave me, right? They can't get away from me, otherwise they're not going to be able to succeed. And that's part of what he did in terms of marketing. He has been candid about it, but unfortunately, there's a lot of people, a lot of these people on the internet who are really leaning into that, and they don't even really know what the hell they're talking about. On top of that, so it's the blind leading the blind, and new students, they don't have the experience to be able to decipher whether they have enough or not. Okay, so I always bring this up as well. If you guys can reliably say that you have a process for each of these things, I'm telling you, you have enough. Every single one of these components I talk about every week, right? Every new student that I work with one on one, I'm pushing them into this type of stuff, right? I have one student who came to me after looking at probably every single mentor on the internet about ICT and then other stuff too, right outside of ICT. And he's tried at first, it's getting better now, but he's tried to force everything that he's ever learned into his process. Like again, having more is a positive, when in reality having more puts more variables. Every model, every PD array has rules, and they have specific characteristics and times when they work out, times when they don't, times when it shows high probability versus another. There's times when they work inside of one another. So again, every single new thing that you add, it's a new part of the learning curve. You're gonna have another month to 3 months or maybe even longer to have to study it. See, I have 6 models for execution, but I've been trading for 7 years. So I've spent at least 6 months to a year on each of the models that I now employ. So I've given them the time to manifest, to get seasoned, and see the different characteristics and really gather data on these different models. So in that case, I'm able to use multiple models instead of me just seeing a brand new PD array or a new lecture that's given from whoever, whether it's ICT or anyone else, and then thinking that we have to, add more to it and just wing it, right? Learn that concept and then just go in and start trading it. That's just not the right way to do things, you know? But I really do, over the last 5 years, believe, as a mentor, me teaching, that if you can get these 10 subjects mastered, you have enough, right? You just have to get better with what you have. And obviously, everything can be taken further, but you got to settle in on these concepts that make sense to you. I don't use every ICT concept. I don't have to. I used to think that I needed to learn every single element, which sent me down a path of watching every ICT video he ever created up to that point. But I found out quickly when I got around people that are more knowledgeable than I was, that I was having the wrong perspective. And that's why it was taking me longer. I probably could have been profitable even faster if I would have just had this mindset, you know. Of course, experience does play a role, so you can't really buy that. You can't replace that, but you can borrow it to help speed up your learning and help you avoid some of the painful issues and confusion that comes, as a new trader that's learning these concepts. So that's why communities like the one I have, the one that the market maker model trader has, the one that my friend from the charter group named CJ, the one he has, Jade Cap I think has one too. I mean, there's a lot of these really good traders to have this this resource, right? And it just kind of depends on who you resonate with the most. But outside of like a handful of people, I don't think most of these people are worth even listening to. It's just noise, especially if they rename stuff. But all of them will tell you that you don't need every concept, because it's just a known fact, right? In those who do understand these concepts and prove that they can use them real time, you don't need every concept. But for me personally, for you guys being here and learning from me and hearing my perspective, if it's resonating, I'm telling you, if you can master these things, which I talk about every single week, every day in my private group, you'll be able to know that you don't need much more. And anything else, right? If it fits, like if you're watching videos or whatever, if there's anything that you discover that may fit inside of what you already have, and you're able to answer all of these questions, and whatever you're learning is amplifying one or multiples of these, then again, you can consider potentially exploring it. But again, be careful with this like information overload chance that takes place in newer traders. Having too many opinions is, also somewhat of an issue, because, like, for example, the market maker model trader, he has his system, he has specific things he utilizes, he has a specific philosophy in what he does that makes him succeed. I have something that's different as well. So some stuff that he may talk about may conflict a little bit with what I talk about. A lot of stuff will align because obviously we're ICT traders. We use market maker models as the core foundation of what we utilize to navigate price. But there's all these different perspectives. So just be careful with it. I'm not discouraging you to watch other content creators who are out here proving it, because I got respect for all the people that I mentioned. So I would never do that. I don't have an ego. But we all have different value that we can provide. There's a lot of things that will align, and we all go out and, prove it, right? We're live. He's live in his private group. I'm live in my private group. He also has YouTube, right? And he shows stuff on YouTube. I'm more lean towards live showing you what I'm talking about, so you can ask questions and stuff like that. Not everyone does that, right? So there's a value there. But yeah, just be careful with these things. Just be careful. The people that do know what they're talking about, it becomes pretty obvious when you hang around people like, me in this community, and then the market maker model trader. You can kind of see the difference versus someone that's like, 20 years old, who has been trading for like 6 months, found out what a fair value gap is, and then went to go rent a Lambo and says, they've made $1 million doing whatever the hell they're talking about. Right? If they're selling you the lifestyle too aggressively, I would stay away from it as well. Because, unless they prove it, If they come out live, show you what they're doing live, and then they have a Lambo, okay, there's an argument, right? But there's really no one that's doing that. I think there's like one or two people that I know of who actually do that, but those it's two people. They're actually planning on not doing this anymore publicly because it's a lot, especially if you really want to help people. So just be careful. You guys are valued, and you got to look at yourself as valuable too, and your time. You need to value your time. So don't just be handing it out like candy to everybody. Vet the people that you listen to, take the good advice, and just try to find those things that work with you. And again, I could really, really promise you with a high level of certainty that if you look to focus on these different characteristics here, these different protocols, because there's a process for each of these, which we teach here. But once you're able to have a process and be able to define what it is you do for each of these things, you're getting real close to having enough. And then experience a lot of times will carry you the rest of the way. You notice how I don't have execution in here? I mean, I have live trade management, but that's when you're already in a trade. You notice I don't have execution as a highly significant thing. Execution's easy. There's many ways to get into the market, okay? But it's the least important, because if these things are not mapped out, which is essentially you being able to navigate price and determine the why behind the things that you do, your executions aren't going to be valid. If you can't determine what the institutional order flow is, what the narrative is, where it's going to reach for and why, which in reality is your really first objective, if that's not in line, then your executions are not going to be good, right? They're not going to be able to survive. They're not going to hold up to the test of time because there's not enough on the back end. There's not enough inner context that allows you to be consistently profitable, okay? Or allows that model to manifest. So yeah, so keep this stuff in mind. Hopefully this perspective helps some or all of you when it comes to your journey in terms of learning. Again, I'm not the only good trader on the internet. I do have very particular things that I use that I don't really see anyone else using. Like, for example, my market maker model flexibility protocol for validation and flexibility. And a list of other things. But everyone has value, right? So the ones that do prove it, it is worth I guess investigation, and you got to find what your style is, right? You got to find a person that resonates with the way that you like to be taught, and not everyone's going to be everyone's cup of tea, right? Like not everyone likes the way ICT teaches, right? Maybe he's too complex. He's admitted before that he overcomplicated things on purpose. I don't think he's doing much of that recently. I've only watched a couple of his recent videos just for entertainment value to see what he's talking about. But, once you find people or a person that does resonate with you, that does prove it, I think you should go all in on that person, whether it's me or not, because again, going back to what I said earlier, you can't have too many perspectives. You can't have too much information, especially if you have a lack of experience and you don't know where everything fits. It makes it harder. And I wish that someone told me this when I first got started. The very first day I got started, I wish somebody told me this, because I would have saved myself a lot of time, a lot of wasted moments studying things that, I should have never been studying anyway, bouncing around, trying to find signal services and all that to just see what a good trade looked like. But even though that was the goal, because I had too many, I didn't even get value from it because, again, the mindset was just not right. So let me see the chat. It is simplicity over complexity leads to clarity. Yeah, I would agree with that. And again, simplicity obviously will come from mastery. So there is like a little period of time where you got to be a savage and study the hell out of everything. And once you find those things that make sense to you, you stick to them. And if you can answer or have an answer to each of these different subjects in here, and you can put a process behind it, I think you have enough. You just got to really lean into it. Which is amazing. Yeah, Mike, I better be good at reading market maker models. I better. It's the core of my concepts, the way that I look at things. And honestly, if we're being honest, if you go look at some of these people that I mentioned, or any other big time trader on the internet that has to do with ICT, there's a very aligned commonality, which is they all use market maker models and Power 3 in some capacity. And again, those two things work together. Okay. Because like I showed over here, you may have a bullish Power 3, but if you break that bullish Power 3 down, all right, like go down a little bit lower in time frames, you'll end up seeing the market maker buy models and sell models that led to the manipulation, the distribution, and the continuation rebalance to redelivery. Because there's a buy model in here, failed sell model in here that tells you that this is a BPR, completed the market maker model within that Power 3. Sell model to get us down to a PD array. Once you see that response, the market maker models are very, very nice because they help you with navigation. They help you with validation. If you're on the 1 minute chart or any other time frame, if you're like a swing trader too, but in particular, if you're on the lower time frame, it could be used as an entry tactic. You just use one of the phases. Like my favorite is a second stage distribution. And a lot of times, if I can get something like this to happen at a logical level, I can capture that smart money reversal. If I'm assuming that there's an obvious target up here, or maybe the daily chart looks like it wants to just wick lower, hits a PD array, and then expands, I automatically start to look for things on the left side. Okay. And then I drag them over, get the last up candle when it's bullish, but you can take the whole accumulation range and you use that as an inverted BPR. And so once you're able to see that, maybe you need confirmation, right? So you take that first one as confirmation. You get that displacement, you get into the second stage distribution, and then you can execute there, put your stop below, maybe a fair value gap in here, or maybe if the low is close enough, you can put it below the low. And then you can just ride it up to the main target to finish off the market maker model, right? So the market maker model, Power 3, these things are very, very deep on a surface level, which is what most people know about these concepts. It's at a surface level. They don't know the like inner details that we talk about. A lot of times it can be a little ineffective if you only have surface level value, but they're very versatile. Every single moment in price, you can look at a market maker buy or sell model or a Power 3. I've been talking about this a lot lately with my private group. I've been showcasing it, even though I've been pointing more attention to it more so recently. But over the years, this is what's helped me be the trader that I am. And once I realized the significance and how deep the market maker models go and Power 3 goes, how it's at every turning point essentially when it comes to Power 3, right? Accumulation, manipulation, distribution, we'd expect rebalance now. Same thing here, right? Accumulation, manipulation, distribution, rebalance, redelivery. We should get another rebalance and redelivery. Okay, same thing in here, right? A little bit of accumulation, drop down, manipulation into a PD array, into a BPR, change in state of delivery, rebalance, right? Once we get up above that high, to redelivery. Accumulation, manipulation below the low, distribution, rebalance to redelivery, right? So at every turning point, you have something to study when it comes to these concepts. Okay, so I want to make sure that point is really driven home aggressively. And obviously, there's a lot of minute details inside of this, but hopefully the theory here makes sense. Maybe at some point I'll try to go even deeper on YouTube about other things that I haven't talked about. But we'll see how it goes. If you simply take what I've just described here and go study that, you're going to be shocked. I'm telling you. So let this be a bright green light flashing, like, look here, okay? Because I can't overstate it. It's so significant. I'll also show you that throughout the rest of the call, okay? But again, hopefully you guys got value from what we just talked about. Very important stuff. Good morning, Tony, by the way. Appreciate you hopping on as always, brother. I appreciate the questions too, you guys. Again, that's why we're here. That's why I'm here, at least, is to get you guys to understand, be very generous with my time, take my time when I'm explaining stuff to you, make sure that you get all the details that I personally know. Because again, I value your time. I appreciate the support. I appreciate you guys taking time out of your weekend to come and spend time here on this small channel with me, right? When you could go to anybody. So I feel I'm obligated to try to get you guys as much value as I can, because time is an asset that's more valuable than money. We're trying to use these concepts to literally buy back our most valuable asset. And I love seeing you guys be able to do that. Honestly, the feeling that comes from being able to share and then see someone go from confusion to clarity and seeing them light up and experience that for the first time, I think that's more fulfilling than me even taking trades, honestly, because I know how hard it was for me. I know how much my outlook on life changed. My love for life changed when I was able to know, like, wow, I actually have something like this. Obviously, I love my life anyway, but I don't know. I never thought that I would have something I could pass on to people and then see them succeed. You know what I mean? So, yeah. So Futures Ninja, that's something that we've talked about for the last 2 years. ICT may have just announced that, but we've talked about that for years, how every PD array has an inverse nature to it. I've talked about that numerous times before he's even mentioned it. A lot of stuff that comes out, well, there's a lot of stuff that hasn't been in the charter group, but a lot of the stuff that comes out recently, he's already discussed before in the private group. So when you have like charter students, they'll talk about a lot of different things that you'll see ICT roll out. Not sure all the stuff that he's going to release, but he's released a lot, and that's a beautiful discovery, Futures Ninja. So hopefully you could see some changes with that. Like if a breaker fails, again, you could use it as an inverted breaker. Same thing with an order block, same thing with a mitigation block, rejection block, inversion fair value gap, obviously. Wicks, right? If this wick is utilized as a bullish PD array, if it breaks through it, it's now used as a bearish PD array. So everything has an inverse nature. You guys have been with me for a while, know that I've talked about the fact that if you have one model, say the 2022 model, say it's a breaker, like was just pointed out, how about an order block, right? If whatever your model is that you're learning and engaging, it comes with two models. You have the main model, and then you have an inversion nature to the model, right? Or the PD array. So every one model that you learn has a duo effect, like a double weapon. It's got two knives at the end of each PD array. So you could use both weapons. If one fails, say you missed the first one or it's invalidated, you're able to now flip the script as long as the context and narrative agrees. You don't want to do it just every single time. You want to have context, right? And a reason why the inversion should work out. But yeah, it's a very, very strong piece of information. There's lots of little quirky things like that we discuss. Again, I'm not sure how far ICT is going to go, but I'm happy to hear that he released that. I think he's talked about it even before recently, maybe like 2 years ago, or when he introduced the inversion fair value gap. I think he hinted at it, the fact that there's everything, that everything has an inverse nature to it. Same thing with balanced price ranges. Another thing too, every PD array is just a variation form of a balanced price range. Like if you think of a breaker, right? We have buy side, sell side. So when it gets to that low, that's why it should not take this high out, right? It's a balanced price range. We have buy side and sell side. How about an order block, right? This order block here. If it goes higher and then breaks the open price, when it returns into that, we already have buy side, sell side offered. So that is a balanced price range. How about an inversion fair value gap, right? Let's use this for example. Price goes up, goes all the way through it. Did we not offer buy side and then sell side? So if we do that, we got to study the lower 25%, lower 50% of that inversion fair value gap. and then just treat it as a balanced price range, right? There's also other PD arrays like ICT's implied fair value gap, which is basically like if there was a wick here that went up, and then there was a wick in here that overlapped this previous wick, you could take the midpoint of that one and the midpoint of that one, and you could end up getting what ICT calls an implied fair value gap. That's another form of a BPR. How about a wick that goes through a displacement or followed by a displacement? Well, price only has that little area in there that's imbalanced. But once it comes down into it, that whole area is a balanced price range. So that wick idea here is a PD array as well. I don't think ICT's really mentioned that as a PD array, but it is. It's a balanced price range. So every single PD array that you learn is essentially a form of a balanced price range. So that's why they work. And what happens if a balanced price range is taken out and invalidated? Or in this case, for our validation process, when 3 of them get violated, it's probably going to go the other way, because now it's not acting as balanced price delivery, continuing to go higher when it does stuff like, breaking through multiple PD arrays, which again are balanced price range variations. How about market maker buy and sell models? When a buy model is completed, when it comes back into the upper part, good example is this here, that is a balanced price range. That is a PD array in itself, a completed market maker buy or sell model. So that when it comes down into it, the upper 25, upper 50% should be respected. If it's not and it starts smashing, then we may be seeing the other direction unfold. And now a balanced price range or balanced price ranges are going to start forming, as we go through. And then once it completes that, if it's going to keep going lower more long term, it should be treated as a BPR as well. So the lower 25 to 50% of the whole entire range, right? So what I just described here is something that took me a long time to understand, or at least to even find. And it came from one of the two mentors that I paid outside of ICT to teach me, because I already had like a taste of BPRs. The only thing that was really exposed was the inversion fair value gap as a BPR, because you got an imbalance and then another imbalance that overlaps it, turning that into a BPR, offering both sides. But then I come to find out, when I was talking with someone that was more knowledgeable than I was at the time, that every single PD array is a balanced price range. And it makes sense. If you have the PD arrays and they're supposed to hold, and you just look at the way they deliver, right, break them down, you start to see how it is offering both sides of the market, right, with whatever PD array you're using, right? So it just makes sense. And once I learned this, it was really, really helpful, right? It really changed everything. And then of course that meshes with the market maker model idea. So, it's a very good discovery. If he did mention Futures Ninja, finally, that every PD array is an inversion or has an inversion. How is the fair value gap a balanced price range? Well, the fair value gap here, once it forms like a bullish fair value gap, unless there is sell side and buy side delivery that is overlapping that range with the fair value gap, it's not a balanced price range. Like if this was up here and there's nothing over here that's offered in terms of sell side in that range, then it's imbalanced to the sell side. It's going to have to offer like it did here and fill in the piece of that fair value gap that doesn't have the other side. In this case, it'd be the sell side. But because we see this here, that's sell side, buy side delivery. There was obviously some type of inefficiency inside that range given this gap. So they offered it once more. But look how it stopped perfectly there. It didn't fill in the whole gap. That's because we have buy side and sell side with a tiny little gap in there if we go to the lower time frame, that they then rebalanced and then redelivered out of. So buy side, to answer your question simply, there's buy side and sell side delivery that creates the BPR. Preferably when it comes to inversion fair value gap, it's got to have displacement. It doesn't have to, but that's the highest quality of that being a inversion fair value gap balanced price range. But if we have like, it's a good example. You see how this fair value gap didn't get traded into? Kind of goes back to what I was talking about earlier. There's a wick here filled in most of it, followed by displacement. So it's not required if it's bullish to go all the way down into this. It doesn't have to fill it in entirely. Sometimes it will, but it doesn't have to because it's balanced. Okay? So it should stop right there or not even go into it at all. This is also a market maker buy model, right? So sell side of the curve has been offered. And then we got buy side here. Okay? Got a wick in there. So we had that little tiny little piece of price delivery in there that was still inefficient from this wick to that low. Drag that over, and it's ironically right where they pulled price down into. Look at the closures, right? It's closing right in that area perfectly in that little tiny gap. Okay, just to edify this real quick. See that little gap in there? That's inefficient. So when price revisited it, it came down into it and stopped perfectly, along with the fact that this is a wick followed by displacement that's balanced down below. We also have sell side to buy side. That in itself is a baby market maker buy model within the larger one. So that's a balanced price range. Sell side, buy side. We have an inversion here followed by displacement. So that's balanced. We have an inversion here, sell side with a stop run. This is high probability in here when you have this. And then we got the next candle that immediately displaces through it. So that makes this high of the candle here, or the open price, a balanced or a very sensitive level, leaving this as a BPR. Because again, the easy logic is the fact that a balanced price range is when at a specific moment in price, both sides of the market has been offered. Like if we have a consolidation, for example, and we break out and then break above, we have lots of balanced price delivery in here. So when it takes stops and then immediately gets above it, when it comes down, there's no real reason, unless it's not going to be bullish, for them to want to smash lower or even go too deep into that range. It's already got a lot of fulfilled balanced pieces of price delivery. And then of course there's breakers and whatnot, which again are balanced price ranges, just like every other PD array. And with that being the case, you should see sensitivity. It tells you a lot though, when you see a balanced price range or any of the PD arrays get violated, how they get violated, how many of them get violated, really gives you insight on what is happening in the market, right? What should or shouldn't happen? Should it hold that level and keep going higher, right? Is it supportive on the daily chart for that to happen? You know, is this happening at the correct time? Like if you're a day trader, is it happening in a macro? If you're a swing trader, is it happening below the Sunday's open price at a higher time frame PD array, right? And is there clear targets above, right? Or below if it's bearish. But if you see a balanced price range forming and then it gets respected, it's just further confirmation and context to why you can trust the setup. And again, like Futures Ninja pointed out, every PD array can be inverted, and every PD array is also a balanced price range. Okay, so these are very, very significant things, and most people don't talk about it. They'll probably start talking about it if ICT mentioned it recently. But yeah, Futures Ninja, did I answer your question? And it's only a balanced fair value gap if you got something like a wick that with displacement that leaves it, right? And then it has a little piece, a little area for it to come down into. Or if it's an inverted PD array, right? If it's got both sides being offered. But if it's just like a normal, let me see if I can find a good example of a fair value gap that wasn't immediately balanced. Like this here, right? You see how price came down into it and closed it entirely? Well, you got displacement. We have sell side over here, but we need it to be a little bit closer, a little bit sooner. Otherwise, they'll be able to use this. There's a risk of them doing this and filling it in entirely. Okay, but once it fills that in entirely, right, and we don't see anything over here, and this will end up becoming balanced when it gets above that high. So the next time it tries to get into that, if it breaks it, that's now an inversion. Previous balanced price range turned to inverted balanced price range. The market maker buy and sell models too. I might as well slip this in here while we're on the topic of BPRs. When you have a market maker buy model and you're able to identify the left side of the curve, okay, this, you guys would agree that this run higher, price breaking lower, was respected as a BPR to go lower, right? You guys would agree with that, right? Give me a 1 in the chat if you agree with that, if that makes sense. You see how this supported the sell-off once it got below as it continued to go lower, right? Yeah, let me know if you guys agree. You guys can see that, right? Don't worry, I'm taking you somewhere. Just got to make sure you guys are able to follow along. Okay, Maddie said 1. I'm not sure if there's like a lag or something. Shouldn't be. But yeah, so because that's the case, and this at this moment was supportive of downside delivery, once it breaks this high up here, that's now a bearish balance price range, a previous accumulation level, turn to inverted balance price range to a distribution level to go the other way. Okay, so that's how you that's the functionality behind why these previous levels on the left side, when you're trading a market maker buy model, should be inverted on the right side. You should see that if you're expecting bullishness in this example. Same thing's true with bearishness. Okay, we have a little accumulation level in here. Okay, oh, yeah. I mean, I guess it's close enough to outline that whole entire range. The more significant idea in here, though, all right, if we're going to be bearish, you want to catch that lower 25% or the last down candle or last consecutive down candles, drag that over, and you could see the sensitivity there for second stage distribution. How do you know it's second stage? Because look at the speed to get below the lows. And then if it's like bullish, so if we're bearish and we're looking at this inverted BPR to turn or accumulation to distribution to the sell side, and we're outlining the last lower 25% of that whole range or the last down candles before the up move. If that's the case for the bearishness, when we look at the bullishness, we got to do the same thing. The last up candle or upper 25% of that whole range of accumulation, turning distribution. But the most sensitive level is going to be here if you want real precision. And why does this functionality work? Because it's sell side offered, buy side offered, previous BPR disrespected, to then invert and go higher, targeting the buy side liquidity, origin of the market maker buy model. And this is fractal. It's not only on the higher time frame. Okay, this is fractal. It happens on every time frame. That's why earlier, if you guys were here, I was talking about how market maker models can actually be used as entry tactics. Because if you take this logic and you go to the 1 minute chart, here, let me actually pull up an example to really drive this point home. Maybe I'll do it on gold. How's it look? Since I know a lot of you guys like gold, so let's actually identify this, right? So yeah, let's just use this little piece, this little fractal in here, okay? Let's move up a little bit, get a little bit more defined. When you're on the lower time frame, identifying a market maker model, if there's ever a moment where there's just too many areas that, in this case, are like going bullish before it goes bearish, and you're trying to outline the accumulation to distribution, you're going to want to move up a little bit and see where the bigger candles are at. See, like this is a lot less loud, right? So we can actually outline this whole entire range in here down to that down candle, the last one right there. But again, the last up candle in that full accumulation range. Look at that beautiful precision as an entry tactic on the lower time frame, using the same stuff that we were just looking at on the daily chart for the yields. I just hopped to gold, and look how fast I identified that in 5 seconds, right? And look at the precision that comes with this. If you have an assumption, the price is going to target a very obvious level. So you may ask, why did I choose this? Well, that's accumulation, isn't it? Or it's consolidation, isn't it? This is part of a larger one as well, obviously, but there's many market maker models inside too. How about this, right? That's a sell model. You want to see something crazy? You see this low, high to go lower. Well, what's this right here? That's accumulation to distribution, is it not? Do you see the fractal nature in the market maker models and why they're so powerful? No, nobody breaks it down like this. Not even some of the big traders that trade these ideas. They don't even break it down like this. I don't know if it's because they're holding back, or if they're, you know, just not trying to share, or maybe they just don't know. I think it's the latter, right? They most of them just don't know. But this is how deep the market maker models go. You can do the same thing with power 3, right? Accumulation, manipulation above the high, distribution that breaks the low, rebalance, redelivery. It's also a bearish breaker. Right? Yeah, Futures Ninja, I totally agree. But I'm not very flashy, I guess. People don't, I mean, they want smoke blown up their ass constantly. They want me to get them in a trade setup, even on a Sunday when the market's closed. Right? It's just, the attention has been very diluted. The perceived value of people on the internet, especially in the world of trading, the psyche of the new trader, it's been tainted, unfortunately. And obviously, there's good people who are trying to learn. It's not that the people that have those other perspectives are bad people, but they're skewed. At some point when they get more experience, then they come and see something like I teach every single week. They start to resonate with it a little bit more. I guess, I don't know. Maybe, what do you guys think? Do you think that some of the things that I teach are maybe a little bit too advanced for the newer trader to really think like, oh yeah, let me dig into this. Like, this sounds powerful, right? Maybe they just don't realize it because their experience. I'm not sure. What I do know is that when people do cross paths with me, it's hard for them to leave because I'm doing this type of thing that I showed you here live, every single live call, and it's there all the time. Bang, 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 every day. Right. Not that I'm perfect or anything, right? I have flaws and make mistakes. Sometimes I get it wrong, but at the same time, this type of stuff is powerful. This is why early on I was talking about how everything comes back to market maker models. Inside of these frameworks, I could find every other PD array that I want to find. Use every other logic that maybe I want to add on top of things. You know what I mean? But yeah, not many live streams are as eloquent. Oh, wow. I appreciate you saying that, Futures Ninja. Appreciate you spending time here. I know you're new. It's pretty interesting how you have that opinion so quickly. I really appreciate that. Let me see. Maddie said, ICT mentioned in his recent video that when institutional overflow is very strong, then they won't reach. Yeah, exactly. Yeah, I mean, you notice that I talk about that all the time. Been talking about that for years. The upper 25, upper 50% of a PD array, right? When it trades down into it, if it's bullish, we don't want to see that midpoint even targeted. If it stays in the upper 25%, which again, we've mentioned aggressively for the last 2 years, as institutional order flow identifiers, it's I'm glad that he's coming out with it more aggressively, but we've been ahead of that curve for years. I think you may have even heard me talk about it too. I've been here for a little while. But yeah, you'll notice that stuff that we talk about, if ICT hasn't talked about it, eventually he'll talk about it because I don't hold back. I'm not holding back anything. What is IOF? So IOF is institutional order flow. That's what the acronym stands for. And reading order flow, there's a lot that goes into it. Probably can't just, well, maybe I can. Let's see. So if we're bearish, assuming that you understand the different PD arrays, you know what they look like, you have a little bit of experience. So, okay, got you a little. Yeah, no worries. No worries. But institutional order flow, if you wanted to make it as simple as possible, when you see price going lower, you want to see bearish order blocks and bearish for value gaps holding price. And the lower 25 to 50% of those levels when they get traded to get respected. You want to see stop runs above highs doing this and then immediately going lower. You want to see market maker sell models unfolding. And then if you can visualize that and that's what you see, you're bearish. You also can incorporate, other assets and what we do here on the Sunday call, which I'll get back to probably in the next couple minutes. Sorry about that. I think we've had a good conversation so far about powerful stuff, right? You guys are having fun, right? Hopefully. And then of course, for the reverse, if you're bullish, you want to see bullish order blocks, breakers, fair value gaps being respected in the upper 25%. You want to see fair value gaps being left available, right? Not even being traded fully through. You want to see wicks also being traded into and then respecting the upper 25 to 50%. You want to see levels on the left side getting inverted, right? Anytime there's, some type of bearish fair value gap, if you're bullish, you want to see it eventually get inverted and respected in the upper 25 to 50%. And then you just want to keep pushing in that direction if that's what you see. And this is fractal. So when you're observing a trade setup and you're in a trade setup, these are things you want to keep in mind. Are these things being respected in the direction I'm trading towards? Okay. And then, you also obviously want to have intermarket relationships. And if you're on the higher time frame, that's where you're using this concept, this idea for narrative. Okay. Instead of I'm executing on the daily chart, you're using these concepts to justify the narrative, the draw on liquidity. If we're reaching for a daily high or weekly highs or whatever the target is, maybe it's a daily fair value gap above us, the price is reaching into. You're going to want to use these concepts from the lens of, okay, I'm justifying my narrative. Okay. I'm not being too concerned about an entry. If you swing trade, right, you can use, again, the 1 hour chart, and you still use this same stuff, reaching for the higher time frames. But in a nutshell, this is how you read order flow. When you're seeing price live and breathe on the chart, you got to think about this stuff. Now, let me ask you this. Don't you think that perspective, thinking this way when you're in a trade, is much more highly effective than I'm in a trade, I'm worried if it's going to take my stop? What's more positive and more productive if you're in a trade to eventually help you stay in a trade or know when it's time to get out of a trade and cut your losses, right? It's going to be the initial explanation, right? Watching the relationship to the PD arrays. Is everything supporting bullish order flow? What is that thing that supports order flow being bullish? Well, are we respecting all the things that I just talked about, right? So yeah, give me a 1 in the chat if that makes sense, you guys. So where's the inversion BPR to the upside there on gold? Where's the inversion? So that would be this in here. Because wouldn't you agree that buy side, sell side, sell side was being respected in here? See the wick trading into that? And it's just continuing to drop. So once it trades through it, and we have a logic, I think there was a PD array down here that it used also to bounce, right? I don't like equal lows like this, obviously. That's kind of stressful because it could just peak down there. But once it gets above this, maybe you wanted to wait because those equal lows. That's what I would have done. But once it gets above this, it was previously treated as an area where price retraced into it to then go lower. But if you drag it to the right, you can see you got to watch how it respects it. And if you can see this type of thing happen, you know that that was now a market maker buy model, second stage distribution that's now unfolded. And then it comes up. We have relative equal highs here, but this was a stop run in there. So this is what's called deferred liquidity. When it runs into this, hits a level where there's a bearish order block and you're bullish. It's an opposing PD array. It's also with a stop run. So that's slightly high resistance. So what do? They come up, tag it, reach down below some short-term liquidity, sweep it, and then off to the races, creating yet another market maker buy model. See that? Accumulation on the left side, breaks above it, turns to distribution on the right side. A very small, tiny market maker buy model off of a retracement to go higher in a larger one that's also inside of a larger market maker buy model inside of the higher time frame run going higher from a larger higher time frame PD array. They induced this reaction. So you guys see that? You guys see this stuff right here? Does everything make sense? I hope it makes sense. I hope so. Let me see. If people gone through core contents, they will understand your concept. Yeah, that's. I mean, I guess that's a good opinion on that. I think I would agree with that, honestly. Although I do start with some traders that are brand new. I kind of guide them on what to look at, so then they can eventually get the most value out of what it is that I teach. I obviously don't give like what's a candlestick type of tutorials. I put you in the heart of the matter. I show you actual things that are going on and how to navigate, how to manage yourself. I guess it's more like intermediate somewhat. But, I encourage new traders to be here because you get to understand the language. You get familiar. And then as you study, you'll start to discover things that are more significant. And of course, I have no problem helping anyone that's just getting started because I wish I had someone that had the type of experience that I have that would be willing to even comment back to me. Like, they don't even comment back to you. And you could be a brand new student that's struggling, damn near about to quit because there's just too much stuff going on the internet. You just don't know what to focus on. And then you reach out to someone praying that they'll at least give you some type of response, give you some type of advice, and they leave you hanging. More often than not, this is the case, especially with the bigger creators. But it's unfortunate. But yeah, I think I'd agree with you, Maddie. Going through the core content, I mean, it'll put you right in the heart of the matter. And everything I do, it'll stick. Everything that I talk about is very sticky, and it's in the right place. It's not scattered around. Everything's being used as it should be used. Maddie said you're giving much more value, like a one-on-one mentorship. I appreciate you saying that. It kind of is, huh? Just like in a group setting. These calls kind of showcase what I do in my private group. But it's obviously for those that may not have the opportunity to join my private group. I still want to make sure, because you guys are supporting me and I really appreciate it. But I want to make sure that I'm able to pass this blessing along because, not many people do what we do. Nobody's really accessible like I allow myself to be. I mean, I work with 20 students per quarter. Kind of depends on where their progress is at. That decides whether I bring on more. But in terms of one-on-one, like actual mentorship, I work with 20 people. And, it's kind of like this, but more personalized. And I can't offer that obviously to everybody because it's just too much. And I spend 3 hours per call with multiple students every day. Who's given their time like that? Right? Like I could just be just trading, living my life, but I want to help. I'm so driven to try to help you guys that I'm willing to make that sacrifice, at least for the next couple of years. I don't really have an outline when I'm going to stop. I'm still young, right? 32. And until I'm satisfied, which is probably going to not be for a while because I want to help as many people as possible, right? Also I'll be here. But I have different options for students that have different goals and stuff like that. But I make sure you guys get a lot of value here. And I'm glad you see it. Let me see. Many people are not comparing bonds and yields. Yeah. People, they try to keep it very simple. You don't have to use the bonds and yields, honestly. But you guys see, if you've been here for a while, you see how impactful it is. How much more clarity and context it gives you. It's not just, I see that the NASDAQ might go higher because of a bullish order block. Okay, what on the back end further solidifies and justifies that I can go in and take reliable trade setups in that particular direction? That comes from a layered approach that we do every Sunday, right? Like we do today and every other week. And a lot of people don't like that though. Oh, it's boring. Oh, I don't want to do any work. Just tell me what the NASDAQ's going to do. And then they fail and then quit. Right? I wonder why. This is you. If you want to be a professional, you gotta view it as a professional. And like a doctor doesn't just learn one part of the body, right? I mean, some of them do. Some of them are specialists, but they know everything about that part of the body, right? They're professionals. They didn't just read one book or get the fast track to being a doctor for that one body part and then all of a sudden make hundreds of thousands of dollars a year, sometimes millions. It took a long time. It took a lot of mastery. It took a lot of the basics and fundamentals and other supportive pieces of information to study. before they became who they are as a professional. And trading is no different. It takes time. And some people don't like hearing that, but I'm not here to tell you what you want to hear all the time. I'm here to show you what to do to make this attainable, right? If you take good advice and do what you need to do, right? I try to help you avoid the different issues based on my experience. I tell you that it's not going to be easy, right? Some of this stuff becomes easier over time, of course. Like it's not very difficult at all for me to hop on a chart and know where any candlestick chart is going to go because everything's so universal. But that's just a testament to how much time that was put in, the good information that I've had, the good influences, the good mentors, um, and me suffering. Okay, like I can't tell you how important suffering in your trading, how important that is. You gotta realize that, especially if you want to go full time, there's going to be times where you're stressed. Life is going to happen to you. Things may happen to you. You may get it wrong. You may just have a cold streak, and you got to be able to build your way out of that. You got to be able to season yourself. Just like I use this analogy all the time, like a person that goes to boot camp, like they've just started, being a soldier or whatever, and then all of a sudden they get thrown into the middle of a world war, right? And they're with a veteran, right? The veteran, he's not really going to be swayed by anything. He's been here before. So he's able to execute a lot better than someone that is brand new, right? Until that person's seasoned, they're not going to be able to have the calm and precision and just effectiveness as that veteran, So it's unrealistic. We're in a war, right? This is a war every day. And there's people trying to take your head off, trying to put you into poverty. They want to execute you, okay, when you push that trade setup. And it's like, if we approach this as if a year is enough or, one thing is enough without learning all these other pieces of context and gaining that experience, if we think we're going to succeed in that short amount of time, sometimes it happens. I only have one student out of over 200 that I've worked with that has done spectacular things in less than 2 years. Shout out Harley, by the way. But he's a special character, It's very far and few between. I wasn't like that. I had to suffer to break my bad habits, because I'm very stubborn, a lot of us are. But, I didn't take no as an answer. I made sure to get myself in front of the right people. By the grace of God, I found these people and found ICT. And I remain coachable. Nowadays, obviously, I'm less coachable because I already have what I want. I don't really want any other concepts. Everything works that I use. I'm able to find setups every day. I'm able to define all of these categories with a very particular process. And it's repeatable. It happens every day. And I have multiple years of consistent trading proven live every single day because I'm live with my private group every day. And they would come out and tell me I'm a liar if I'm not being truthful. So I have a different level of trust behind what it is that I do, but I didn't get there overnight. It takes a lot of times. You've seen this statement. It takes at least 10 years to become an overnight success. So I wouldn't really call that an overnight success, right? You could look at what was it? Was it Thomas Edison that said this when he was creating the light bulb? Was it Thomas Edison? Yeah, Thomas Edison. When he was making the light bulb and failing constantly, he was like, at the end, someone was interviewing him, right? And he's like, "Oh, how do you feel about failing so much?" And Thomas Edison was like, "I didn't actually fail 10,000 times. I just found 10,000 different ways that it didn't work until I found that one way that it worked." What a profound way to look at failure. It's not really failure. You're just on a learning process of discovering the ways that it doesn't work, right? And going and getting through that, sifting through the things that just don't work. And there's a lot of that in trading. You got to be prepared for it. And those that aren't, those that live on cloud 9 every 5 seconds, got their eyes on Lambos before they even took a trade, you're going to wake up with, rude awakening. And it doesn't have to be that way. Just expect it's going to be hard. You think that something like this that's made to destroy you, to cannibalize you and all these other people, even big hedge funds, you think that that's going to be easy? You think it's going to be easy to get there quick in 2 seconds? Now when we start talking about a year, 2 or 3, you start to gain a lot of experience and things start to look up from there if you do the right stuff. You know, some people will learn the wrong things for years and then finally learn the right stuff. And then, just depends on the person, right? Uh, Whether they'll learn faster from that point or not. But it's very important to have the right mindset, you know, and not only that, but the right information and learn from people that prove it to you, who have these conversations, who aren't scared to scare away those that may not be serious. I don't want that to be the case, but sometimes the truth hurts and sometimes the truth is too much for people. And it's unfortunate because the truth, although there's some hardship that comes with it, the truth is there's nothing like this industry. There's nothing like the freedom that it provides. There's nothing like the complete change that can happen to your life and your family tree that can come as a result from learning how to do this. There's nothing. And you got to reason with yourself. Is that a worthy goal to pay a price that, maybe a little bit larger, maybe way larger than you thought it would be? Is it worth the sacrifice, the hardship, the personal development, the growth that's required to be able to achieve a freedom that people don't even realize is available to them? I think, the way that I thought at first, I thought that it was definitely worth it. And I had times where I doubted things. I never was going to quit. I had doubts of my own abilities, but I knew I was never going to quit. And thank God I didn't. Thank God I had good people around me. My faith in myself, which got stronger over the years. I wasn't always the person that I am today. I didn't always think the way that I think today. So I feel like trading's had a much larger impact than just financial. It's turned me into a different person, a better person, a more responsible person, a more thoughtful person. So, I've made trading mean more to me than just about money. You need to do the same. I encourage you to do the same, right? Because you don't want the first sign of hardship to scare you away. Because it's not worth being scared away. Even if this takes you 10 years to learn, but by that 10th year, you're able to gain the freedom and success that you wanted to achieve and be set for the rest of your life. If you think about the rest of your life, what is 10 years? If you can achieve something like this. Obviously, that's exaggerated. It's not going to probably take most people 10 years. But one of the biggest people on the internet in the ICT space, it took him about 11 years before he even saw a dollar in terms of profitability and, being able to quit his job. Jade Cap, if you've heard his story, it took him literally about a decade of failing to finally hit something and understand himself and what he's doing in the market. If he would have quit, imagine his life right now. He'd still be working a job he hates, right? If he would have just submitted to the hardship, and stopped believing in himself. Just think about that. His life would be totally different. But he wouldn't take no for an answer. And you have to agree to that. You have to, when you trade, you have to sign on that dotted line that quitting is not an option. Because if it is an option, this is not for you. This isn't for people that are going to put one foot in, one foot out. There's a way to do things profitably part-time. At first, we all are pretty much part-time until we could start, making some progress. But if you're just one foot in, one foot out, every week you think, oh, I should probably quit. You got to really think about what you're doing because you don't want to waste time. Maybe there's other things that you can do. I don't encourage you to think that way, right? I encourage you to not take no for an answer. No shouldn't be an acceptable outcome. Failure, let me see, who said that? Yeah, elders, one of my private group students. It's only failure if you stop trying. Exactly. Right? Exactly. It's only failure if you stop trying. And that's the mindset that you guys want to have. Okay. So again, I hope that this conversation has been helpful to you. You guys have stuck with me for an hour and a half, so I think you're getting some value. And we haven't even talked, a crazy amount about the charts. But those of you that are willing to sit through these types of conversations, I know ICT has said this before too, But those of you that sit through these conversations that are wanting to hear this type of stuff, that's how you know that trading's for you. Because think about it. The people that hop on and once I stop talking about the chart and they hop off, you know that those people this is not for them. We're talking about very important things that are bigger than the chart, right? Things that'll benefit you to think about later on when you are engaging and you do find your way or on your way to finding your way, right? This is how you know that this is for you. So if you resonate with that, then you should today, if you haven't already, submit to the fact that taking no for an answer is unacceptable, right? And just continue to do everything that you possibly can to be a better you, to have a better mindset, to look at failure in a more positive light as a tax on success or a tuition fee or, a loan that you're giving to the market so you can make it back with interest once you arrive. Because that's really what they are, or lessons, right? Just simply lessons. You're learning 10,000 ways that it doesn't work so you can find that one or two or a couple ways that it does work, right? It's vital to have this type of mindset. You want to have a growth mindset, positive, optimistic, ambitious mindset. It's controlled, obviously. You don't want to be reckless gamblers to try to get to the goal, but I'm telling you, this is such a hugely mental game, and you got to spend time on it. If you notice in the that little screenshot, you pull it up one more time, and then we'll get back to the chart, you guys. Again, I appreciate y'all hanging out, wanting to hear these types of conversations, because I had to have these conversations to myself. I didn't have someone other than ICT come out and really talk about this stuff, especially someone that's accessible, So I appreciate you guys finding value in this type of conversation. Where the hell is just a freaking image? Wait a minute. Not sure where it went. Where did it go? There it is. So again, risk management, loss mitigation. I probably should. Oh, I thought I had it on here. But psychological management. Okay. Psychological management. I have it on my other list that I have. This is one that I made for 2026. But psychological management is another one to put on here. You have to have a process for psychology management. Okay. If you don't have that, all these other things may not work out. Okay. So yeah, I would take a screenshot of this as well. I have it in my free group too. I've shared this at the start of 2026. It's very important stuff, you guys. It really is. And you guys that stick with me long enough, you guys see that I talk about this so often. Risk management and psychological management. It's so important because you could have the best setup, but if the trader that's operating it is psychologically a mess, total wreck, constant stress, constant negativity towards themselves. I mean, when you get into a trade, how are you going to believe in you if you already don't believe in you in general? How are you going to believe in your abilities if the person that is taking the trade, which is you, you're not looking very nicely towards them, right? Like, how are you going to succeed with that? Right? If the you is not loved by you, is not being seasoned with personal development, it's not going to happen. It just won't happen. Okay. So yeah. So again, if you guys ever have any questions about these types of things, if you go through things, my DM is widely available. I'm always willing to get back to everyone. I never leave anyone hanging. Even when my community does get larger, if it gets larger, right? If the Lord allows it, and wants me to have that, I will still take time out of my day, probably an hour or two, to go through every single thing that anyone ever sends me, so then I can answer the questions. Because I'm here to literally help. I'm not here just for myself to hear myself talk. For a long time, I didn't even want to listen to my own lectures, right? I don't know why, right? I don't know. It was something I I just didn't like to do. But nowadays, it's just a shock to hear how I speak about things, where my mindset's at. When I just review it, where my skill set's at, just to look at it from like a third party. It's been a different experience lately, the last couple of years. Um, I don't know. It's important. It's an important thing to me. Maybe it's not to you guys, but it's just something that kind of had a hard time with before. Let me see. Futures Ninja said I made 90K and went full time too early. Ran out of money eventually, just due to bills and debt. Yeah, yeah. That's one of the hardest things. That's one of the hardest things. You always want to have a good amount of savings, and you want to have at least 3 to 5 years experience, proven profitability with zero emotion to losses and enough money to fall back on, right? In savings, and an ability over time that you've proved to yourself to get out of any size of drawdown. And also an ability to not even worry about any size. You always want to have a minimal loss amount, right? And something that you can for surely know that you're not going to breach that amount, just like a max loss in a funded account, right? You want to be able to have that proven over years, like under your belt. There's a lot that goes into full-time trading, and a lot of people discover that, maybe the biggest thing that they would want to do, especially if they like their job still, maybe like the benefits and whatnot, or have a retirement and stuff like that. You could just look to cut your hours at work, right? That's a really, really admirable goal, because then a job becomes a lot less of a hindrance, especially if you like your job. Now, if you hate your job, obviously you're going to want to think a little bit differently. But I have a lot of traders and students that they love their job. Some are in tech, right? Some build houses, do construction, some do other things, and this is just something that even if it overtakes how much they make at their job, they still like their job. There's nothing wrong with that. If you're like me and you literally cannot stand your job, I mean, you got to start to think like, okay, what am I going to do? What am I going to do to get there? And there's ways to multiply what it is that you do here. There's dividend paying stocks that can give you a payout if you grow an account in a retirement account. There's options, right? There's many, many things that you can do to elevate. There's YouTube if you have wisdom and you can, go on a mission to help other people. There's other ways that you can do things, to not only provide value, but also bring more value to your life as well to help you achieve that goal. So, yeah, let me see. Trading on tilt. Appreciate you hopping on. I'm glad you like these types of conversations. Again, you're a trader that is most likely, obviously can't guarantee anything for anybody, but most likely going to probably do very, very well if you give it time, right? If you're here to hear these types of conversations, if you like these types of conversations, if you see the value, I'm telling you, it's one of the clearest signs. Like if you catch yourself listening to Twitter Spaces from ICT all the time, you can't stop listening to them because you just love the value that's provided, and you know that it's really helping you. I'm telling you, this is for you. You should have no doubt in your mind that this is for you. In that case, it's one of the surest ways to determine if this is for you. You just have to identify your weaknesses, identify your strengths, and amplify them, and then just start to go hard. You know what I mean? Don't take no for an answer, because you're going to regret it the rest of your life. And that's a regret that I never wanted to accept and will never accept. And I think you should do the same. What's up, DJ? What were you doing when you quit? So I never quit. Oh, you're talking about, okay, with like work and stuff? Well, I mean, you got to have a big stack of money, right? What was I doing when I quit? Oh, you're talking about like what I was doing before. Well, before I started trading, I was doing construction. I did that for 7 years. I wanted to start my own business with it, but I kind of learned about the industry, and there's a lot of stuff I didn't like. Like I don't drink. I was trying to stop drinking and smoking and doing all these things. I don't do anything anymore. I used to go really hard when I was younger, but I just noticed that was too much of the culture in construction. And we're also very underpaid. when we worked doing that stuff, like 7 years working construction, the most I made was $28 an hour in the Bay Area. Like that doesn't add up with the work I'm doing. They're making hundreds of thousands of dollars per job, and it's like I'm only making what, 2, 3, 4, $500 per day, but before taxes. And the Bay Area in California is extremely taxed. The whole state is, but at the end of the day, it turns out to be nothing, and you're breaking your back doing these things, and they're getting rich. It's kind of the same way with every job, right? We're underpaid a lot, and then taxes kind of just kills it even further. But yeah, and then I thought about making my own business, and then I found trading right during COVID, 2019, and then really started taking it serious because of COVID. And I got laid off at that job, and ever since, I mean, I do some stuff here and there on the side. I help my cousin sometimes, and do a couple of other little things just to add value. I like to always stay busy, but it's to the point where if I don't want to do anything, I don't have to. But hey, why not make extra money if you can, right? If you have other skills. But it just shows the difference in people's opinion. I don't necessarily have a problem with working, except I hated my job doing that because I was getting paid very low amount of money. So if that's you, again, you can structure things the way you want to. But I wouldn't look down on people that think that they want to keep their job. I have like I said, I have a lot of students that want to keep their job. They love it, and they make good money. So they think, why not stay with it and just cut the hours? Because once you start cutting your hours and you have less time at the jobs, if you don't mind working at your job, you'll notice that cutting your hours and still having that extra income, maybe the benefits and whatnot too, if they're really good, it doesn't really become much of a hindrance anymore. And you actually want to show up to work because it's not taking your whole entire life. You now have time and more money. You're basically giving yourself a big raise anytime you want when you're able to trade and you still keep your job. So there's different perspectives. You don't want to be very closed-minded and put so much pressure on yourself. Your first step should be to make part of your income that you already make. And the main goal is obviously to be profitable in some capacity, but then also maybe make enough to cut your hours at your job. Maybe instead of working 5 days a week or 6 days a week, you're able to work 2 or 3. That opens up a whole new world for you. And you're a lot less tired. The job becomes less of a hindrance. And again, if you have goals of, attaining the full freedom of trading, you got to be prepared for it. So think about that later down the line as maybe a longer term goal, because you want to save at least 2 years of money in your bank account. So if you were to quit today and lose every single day, you still have 2 years to live off of, because you want to have that safety net so you could trade stress free. Because the worst thing you could do is, quit too early, not have at least 2 years of savings in your account so you can cover all the bills and trade soft like normally without being so stressed. And then you could weather the storms that may come. You also want to prove consistency for at least 3 to 5 years. I say 5 years before you look to go full time. I didn't take this advice, and I made it harder than it needed to be. But luckily, I came out the other end and was able to sustain. It's not going to be for everybody. It's very difficult. It's very hard, So keeping that safety net there for a little while longer, there's nothing wrong with it. You shouldn't beat yourself up for it either. Remember, this is the hardest thing to do on the planet, in my opinion, because it's you versus you. Okay? But there's different ways to look at it. You know what I mean? So hopefully any of you guys that maybe have been thinking about these things, this is an important topic. We all think about it, right? We all start trading for a particular reason. And the way that you get to that goal, whatever that may be for you, it's very, very important to plan it out, to have reasonable goals. First you're unprofitable, then it's to become break even. Then from break even is to become a little bit profitable. Then it's to become even more profitable. And then maybe to knock down your biggest bill or pay the smallest bill at first, and then move on to the biggest bill, or knock out multiple bills until you get to the biggest bill. And then it's aiming at covering all your bills. So then your paycheck from your job can be extra, just something that you can put away. Again, assuming that you like your job, right? And then once you're able to do that, and then you can triple your income or even double, I'd say triple your income monthly as a trader consistently, at least multiple times a year. Like most of the months you're able to be profitable and triple your income. And you have at least, well, I guess a year and a half, 2 years, preferably 2 years saved up in the bank. That's when you know it's time. Okay, I can quit my job and be responsible with this decision. And I don't have to feel like I'm doing it too soon. You know, you set yourself up for the best ability to succeed when you do it that way. People don't agree, right? People have these crazy mindsets thinking like, yeah, I'm profitable for a week, so I'm going to quit my job. I just got my funded accounts for the first time, took a $500 withdrawal, so now I'm going to quit my job. And then they lose everything because of stress. They're not prepared for it. You got to prepare yourself that it's going to be extremely stressful at first when you quit your job. You're going to be panicking a lot unless you've done the work and you've preemptively planned this out. You've done the work to pad yourself out a little bit. Maybe you got to get multiple jobs to be able to get that padding while you're studying, while you're learning to be a trader. You know, whatever it takes. If that's your goal, it's going to be required. You know, however you got to, you know, decide to get there. But you got to plan these things out. You can't do it on a whim because, again, it's just going to end badly, you know? So, yeah, just some things to think about. Again, this is stuff nobody talks about ever because it's just a lot of people don't like it. They want you to say, or they want the person to say, yeah, quit your job, follow my system. You'll win today and you'll quit tomorrow. It's like, and then they find out that doesn't happen and they've already paid them and just a bunch of false advertising nonsense. And it's damaging, you know? So it's better to just think properly about things. Do you use daily wick measurements? Yes, 100% of the time. I use all the PD arrays. I measure all the PD arrays, but I absolutely use wick measurements. Like if we're trading up into a wick like this, I would break this wick down, get the quadrants, and as I'm looking to target these equal highs, I'm using those quadrants as gripping points, like I'm climbing this mountain to get to this high up here, these equal highs. So that quadrant, or the quadrants in that wick right there, the price is trading into, if I'm looking to see this go higher, which I bet you is a market maker buy model in there. Oh, what do you know? Little market maker buy model. It's like it's everywhere. It's like what we talked about with this, just shows up in every single time frame, every perspective, every day, all the time. And that's a true statement. But yeah, answering that wick question, I think that would be the wick. Is that the daily wick? Yeah. So when we drop down, I would take this wick here, measure that out, get the equilibrium, 75%, 25%. And then as I'm calculating this market maker buy model or mapping it out, I would really want to use those levels, those quadrants as gripping points, right? All the different PD rays on the left side. It's like like I'm climbing up a mountain to the buy side. And every single thing I'm using as gripping points to climb up as I get up here. And one, you know, may get traded through and then it may slip, like you're climbing up the mountain and you grab a loose rock and it slips, but you don't fall entirely down until you come all the way down to, you know, levels that make sense for that to happen. But you just keep looking at it this way. As you climb up until it hits that level or tells you otherwise that it's not going to go up there, you keep pushing it up. You keep pushing those levels. You keep thinking about the market maker model. You keep thinking about the phases. You keep thinking of power 3 at every time it retraces, because every retracement can be seen as forming an accumulation, manipulation, distribution. So something like this. Drop down, rally, rebalance, redelivery. Accumulation, drop down, rebalance, or displacement to rebalance, which didn't really offer. It offered a little one in here. Never really came back, but it was in a hurry, right? Balanced price range. That's a breaker. So it didn't have to come down in that again. We have this here as a breaker too. High, low, stop run, inversion fair value gap, retracement into the breaker, upper 25 to 50% of the low to the high, creating the breaker. Or you could just simply use the last up candle before it dropped. It's being sensitive. So again, until this is proven otherwise, I think our opinion on this asset is going to remain the same. Oh wow. Oh wow, we already went over like 2 hours. All right, I'm gonna fly through this. I know you guys probably got a lot of stuff to do, so I'm sorry. I didn't realize so much time passed. Hopefully, you guys got value at least, right? We talked about important stuff, so I mean, kind of is what it is. Man, time flies when you have fun, huh? I'm obsessed, and I love talking about this stuff. There's just so much stuff that needs to be talked about, and I want to help you. You know, I don't want to give you half-ass statements or things that are just not useful. I want to get you as much as I can from my experience because I know how hard this is, and I also know how effective and dynamic and confidence boosting this stuff is. There's nothing like this industry, and if you love it like I do, you want to get all the information that's going to help you find yourself, and then you can help yourself succeed. And I just play a small role in getting you clarity. I'm not responsible for anyone's success. Neither is ICT. It's just certain wisdom to help you walk the rest of the way on your own. And you're responsible for that. You take the risk. You're the one making the progress and putting in the work, going through the sacrifices, dealing with the ups and downs. And I'm just here to try to play a small role, just like ICT is, for everybody. And getting you clarity. You know what I mean? So when you do arrive, you want to give yourself the credit. And I appreciate the appreciation you guys show me. But I want you guys to point that towards yourselves, because you have to appreciate you. I'm just here to help keep you on the rails, highlight things that you may miss, give you some of my experience. And then you can go and do some nice things and bless other people with it too. Help me pass my blessing along. And then you also pass your blessing along, and then you help someone else pass their blessing along, and give the right information, instead of the toxic world that trading has evolved into in many ways. That's the financial industry, though, right? There's lots of corruption, lots of cutthroat behavior. So it's kind of is what it is. But again, I appreciate y'all sticking with me through these conversations. But yeah, so. Again, I do believe that once we get back to this, I do believe that we'll still continue to see this go up. This order block is definitely in my crosshairs. I want to see if price can hold the upper 25 to 50% of that. See it return into it and then rally. See if we can't blow these highs out. And then whatever it does above these highs, something I do have my objective or eyes on is this here. Okay, so we'll see if we can target that. If we could jump right up into that. And we could use this order block. The fact that this inversion for value gap has held price. If this goes higher, again, that may have an impact on the dollar. Looks like everything that I outlined for the dollar, though, aside from the fact that it's consolidated, it's respecting the levels that I mentioned should hold price. So we got the inversion. We'll get to that in a second, actually. But yeah, so if we do see this go higher, maybe it'll have an impact. There's still a crack and correlation, so we're going to do what we've been doing, keeping this on the back burner, keeping an eye on it, but we're putting it on the back burner for a little while. Still doing our analysis on it, still understanding the importance of it when things do get into a symmetrical market. But we'll see the yields if they can go higher. If the dollar is going to go lower reliably, eventually this low is going to be taken out. Maybe it needs to get up to the wick midpoint here on the monthly to then use it as the origin PD array to start a reversal. I'm not going to assume that, right, until something proves it. I want to see a reaction from that. But if the dollar is going to go lower, ideally we want to see this go lower too. If not, we'll just keep it on the back burner for a little while, okay? But this is what I see in price for this asset coming off the inversion. So we'll see if this low can stay intact. Same with that wick. And then as far as the bonds go, again, this is an asset that has a heavy impact on what the indices are going to do and the foreign currencies, reverse correlation to the dollar or influence on the dollar. So if the yields go higher, we want to see this go lower because these two assets are counter to each other. So one will go up, the other will go lower. If they're both moving together or they're both consolidated, that's going to send reverberations through the other assets. It's going to promote further cracks and correlation. It could promote lower probability delivery. So in those instances, what do? It's telling you to lower your risk, because at any moment they could flip a switch and everything gets in line with the correlation, right? So we got to determine which one's lying between these assets and the others when there's a crack in correlation. Sometimes it takes time. But yeah, so that's going to be my opinion on this asset. And if this goes higher, we'll see this continue to try to go lower. Got consolidation. That's a balanced price range. I don't want to see the midpoint of this get violated. Pull that over a little bit. So it's the consequent encroachment of the BPR right there. And so we'll see what that wants to do. If we move to the monthly chart, we have a target down here. So maybe that's going to be something that they want to target. It's our monthly low. And again, we got all these different quadrants in here. So each of these quadrants is a target. If it does respect this level, which again, we have a large wick in here, we want to see if it's bearish, the lower 25 to 50% get respected. We want to see this buy side to sell side delivery act as a market maker sell model, right? So we got buy side, sell side delivery. It's offered it up to this point, right? Previous accumulation, once it gets traded through, previous rejection block, it turns to inversion. Price rallies up, order block, change in state. So it's been pushing. So we're gonna have to see something significant for this market to then go higher. If it is going to choose to give this up and not target these very, very clean, obvious trendline liquidity pools down here. So we'll see what happens, right? If the indices go higher, if we want to see them go higher, we want to see the bonds go higher and the yields go lower. That relationship has not been favorable at the moment. We've had a lot of manipulation, and the testament to that is all the stuff happening in the world. So it makes sense that there's somewhat correlation issues here and there. It just means you lower your risk. You know, doesn't mean you can't take a trade. You know, you could trade with cracked and correlated markets, right? But you know, you want to lower your risk. It's situational awareness, right? Like I use the analogy of a military veteran versus a boot camp person. The boot camp person might want to go into the war and just go get his first kill because he's super anxious, super excited for whatever reason, right? Versus the military veteran who's not going to be recklessly just running into the fire. He's going to wait for the right moment. You know, he may take a couple pop shots to try to get something off. Maybe he hits something, maybe he doesn't. But he knows it's lower probability for him to be safe. So he's going to be strategically calculated and wait for his opportunity. You don't want to be like the boot camp person and just run out there every single time, risking everything all at once, in every circumstance. You want to have that situational awareness. If there's a crack in correlation, ICT says that's the first rule of high probability, right? Is the market symmetrical? And that means bonds, yields, DXY, foreign currencies, and the indices. And you can add others too, like gold and silver too, because they have an impact as well. And I have my risk on, risk off PDF in the private mentorship as well, in the group, but also in the free group as well. So you guys have access to that. Hopefully a lot of you have had a chance to screenshot that when I have shown it. But that's what we do here. This is what the whole process is, okay? So we'll see what happens with this. We are kind of stuck, so we'll wait and see what happens. There's really no news, so I wouldn't be surprised if this whole week continues to do this. So we'll see. We're at the midpoint of this. If we start to get displacement and we take this high out, what do you think I will be thinking about this lower movement to go higher? I'll be thinking this was accumulation, turn, distribution, and we're going to see a buy model targeting the equal highs. If this gets above that, so that's what my opinion would be. Otherwise, we're going to keep being consolidated and gravitating lower. Consolidate, gravitate lower. So we'll see what happens, right? But that's my opinion on the bonds and yields. So let's quickly get through some of this. Again, if you guys have any questions along the way, you can ask. I'm going to try my best to get through this quick, though. I know you guys have been here for a while. Got to erase some of this old stuff. Okay, so when we look at the monthly chart here, again, we've been observing this as a bearish breaker, right? We talked about this. We literally called it way back here too. If you go to some of the content I made back in 2025, well, last year, uh, and you watch how we navigated this, we navigated the buy side to the fair value gap here, and then we mapped out a sell model to the lows here. All recorded, all proven, all shown publicly. And then we've been using this breaker for so long. It's a quarterly breaker, but it's also a monthly bearish breaker as well. So we got this candle here. If we break that, that's going to be a change in state of delivery. So it runs the risk, because a change in state on this monthly chart hasn't occurred yet, it does run the risk of respecting this bullish order block and then going up, right? I would prefer, given what we see here, that it doesn't do that. I'm mapping out this as a market maker sell model, right? This is just a large sell model. We got the origin, accumulation, reaccumulation. Once we can close below that, I will use this last down candle as part of the balanced price range, accumulation turn distribution. So first stage will be there. And if we can use that, right, and then get us down to this low, once it breaks this low, we can use that as second stage distribution, assuming that this longer range target will be looked at as a possible idea. First and foremost, though, we obviously have these equal lows here. That's really obvious. We talked about that last week, basically 2 weeks straight. It's been reluctant. We did map out this run to go higher, respect this level ideally, not come up into these deeper levels. Because again, we got a wick, displacement. We have a breaker, right? So a balanced price range there. We have displacement through this fair value gap. That's a balanced price range to this low, up to that high. So all of that, if we're bearish, should not even be attempted to get traded up into it. And we're also able to frame out this as a market maker sell model. Okay. So again, anytime the left side's getting violated, it should treat it as a balanced price range. Same thing over here, balanced price range if it breaks through it. Inverted BPR. So it gives up the bullish sentiment to then turn bearish. Accumulation to distribution, like we talked about all morning, right? So my opinion is going to be very similar to what it was last week. I want to see if we can target this. I like how we've already started this delivery. So we may open up right out the gate on the dollar, wick into this up candle here, use it as a bearish order block, utilize the low of this inversion, maybe stall out because there's no news, or it could just melt because we've already started the delivery. We have accumulation in here, manipulation, distribution. We may end up getting a rebalance. We broke that low. We may get a rebalance into this level and then redelivery. That's what I would like to see. This high took this high, and we've reacted pretty nicely, closed pretty nicely below it. There's no body candle that closed above that. So this tells me that we're still underlyingly pretty bearish. We do have to consider the fact that this right here is a bullish order block. We do have to realize that we're trading into that. So what is that causing? High resistance or low resistance? If we're bearish and we trade into a bullish PD array, is that high resistance or low resistance to be expected? Which one? Let me know in the chat. Yeah, elders, exactly. High resistance. Why? Can you explain why? It's okay if you can't. Hopefully you can, though. You could just say, I can't explain it, or just put a 1. Any of you guys, if you don't know why this would be high resistance, yes, elders, exactly. It's an opposing PD array. Opposing PD arrays, when we trade into them, say if we're bearish and we trade into a bullish PD array, you can expect high resistance, right? You should expect it to have a little bit of turmoil getting through it. And then, of course, if there's like a failure swing down here, once it gets closer to that, it may be low resistance. Because this is equal lows here, it may have a low resistance capacity to get down through that. Once it gets through that, though, again, you could have the chance for high resistance to occur. Obviously, we don't just impose it. We do want to be aware of this being a possibility. So if we get stuck in something like this, clearly the high resistance nature of trading into an opposing PD array is on display here. This is a great example of what you can expect. And this is a fractal idea as well. So when you're on the 1 minute, same thing can occur. It's a little bit more dynamic, but same principles apply. Everything's universal. But because we've already kind of started pushing, if we would have broke outside this low, it would have been a little bit of a different scenario. I would have expected with high confidence that right out the gate on Sunday going into Monday, we should rally up a little bit and then rebounds to then redelivery, right? I think we can still get that here, but we do got to be cautious of the dollar being in consolidation, okay? Well, my main objectives are going to be, this low here mainly. That's the first one. We have this high here. Those of you that have been with me for a while and been on a lot of these calls, in terms of identifying liquidity that we want to identify for the coming week, you want to have the current week's high and low, or the previous that just passed, that high and low. That's the weekly candles high and low. So those liquidity pools are significant if we want to get down here or up here, whatever the opinion would be, right? It's just theory right now. You also want to have Friday's low, because when Sunday opens, we're going to have to get through that low before we get down to the weekly low from previous, right? So that's important to note, that liquidity, because we could trade inside Friday's range and then look to displace and target that low. And if you're on the lower time frame, that can be a good target. You could frame a setup off that, a little scalp, right? And you could have something to frame a setup on. It's kind of going back to my liquidity mapping list that I've given you guys. If you haven't been familiar with that, I encourage you to look at it. It's pinned in the community tabs in both the private and free group. I talk about it all the time as well. I'm not going to get into it right now. I've already taken a lot of your time, right? Try to get through this quickly. But yeah, so outside of that, outside of that, right? Weekly high, weekly low, Friday's high, Friday's low. You also want to look at things that are in close proximity in terms of PD arrays. So we have this balanced price range. We have that low. We have a wick here. You can break down into quadrants. We have this wick here. We have the inversion fair value gap. So if we're bearish, we're only really going to focus on things down here in terms of the draw. So PD arrays being the lows, liquidity also being the lows, any type of equal lows, maybe even equal highs that haven't been tapped. Those could be used as counterparty. Any like this, the bearish order block. The next candle, we've already triggered this as a bearish order block, and that's coupled with the inversion fair value gap. We have the liquidity that I just identified for you, which is the same across every asset. You do the same thing, whether you're on the NASDAQ, the S&P, or anything else. You still want to look at those specific liquidity pools. But when we open up in here, we have this order block that's coupled with the inversion. So when we open up and trade into this level, that's a PD array. So that's a rebalance and then potential redelivery, right? This turning point here, this fractal high. Here's another thing that I haven't mentioned either about Power 3. When you have a fractal high, what do you think is happening there? Right? If you have a high here, then a high here. What do you think is happening when we create that fractal high? Power 3, market maker models, so on and so forth. So this is another way to look at fractal highs and lows and how everything always comes back or can be placed inside the foundational framework of a Power 3 and market maker model. So you could look at that in here. And it's not going to look perfect every time, but you could rest assured that the components are there. I've done enough study to know that that's the case. And I want you to do enough study so then you know that this is the case for all the stuff I talk about. I want you to build that trust. I can't, unfortunately, transfer that to you. Hopefully, I'm somewhat being able to do that. So it encourages you to go study it and you're slowly building that confidence. But there's not going to be any avoiding that. But keep that in mind when you see a fractal high and low. If you got those 3 candles, right? Like this, for example, this down candle here, accumulation, manipulation was used on this bullish daily candle, and then distribution, and then a failed rebalance, right? And then we consolidated, right? Inside of a logical PD array level, okay? So again, when we open up, I'd like to see if we can get up into here. Let me actually move this Move this a little bit. Guess that's not really fitting what I want now. So I wouldn't be surprised if we come up here and look to go lower. So I'll keep that on the chart. So we'll see what it does. It could either do this or consolidate. Or if they want to get real crazy, they could use this order block, like I said, is a risk, and try to bounce it up a little bit further. But again, remember, we're hugging this lower part of a large breaker, right? For a while, we were looking at this monthly fair value gap. But once we got this rejection block up here, we talked about this accumulation, manipulation, distribution, rebalance to redelivery. But it failed and broke the midpoint and got below this. We had this outline before it was happening as a contingency plan. And we can see how from July, right, going into the end of the month, it's kind of sideways. But it started the bearish power 3 going to the downside. We had a breaker here that got inverted, broke down, came back up to the breaker candle, inversion. The low there, that's a breaker itself, low, low, high, lower, low. Inversion fair value gap. 50% was broken from this low to that high. So the market maker buy model in here failed to stay above equilibrium. This one completed. That's a smaller one inside that breaker if you drop it down far enough. But we got down below the midpoint of this range from low to high. And then it gave you the second stage distribution using the market maker model flexibility protocol I teach. Okay, so again, with a dollar in a nutshell, I want to see if we could do this. We're going to have to see how this consolidation unfolds, given that there's no news. But my objective, gun to my head, I'd like to see if we can't get price to come down into some of these levels, keeping in mind that we have to be a bit cautious because of this, right? This is all a very nasty range in there. So getting through that may be a little bit difficult for price because there's so much, and we already have a stop run here. So we'll just have to wait and see. But gun to my head, I would like to see us go down, right? Unless eventually the dollar does explode to the upside and gets beyond these levels, then that'll show you that sometimes there's a lagged correlation and the dollar would be the liar, falling in line with the bonds and yields. So that's something that I'm watching, and we can only watch it and assume what it could do when price gives us more information. Okay. But again, gun to my head, I'd like to see us go down here. Okay. So do you guys have any questions about the dollar? Hopefully I got every piece of detail that's made sense of this for you, so you understand my perspective. Just throw a 1 in the chat if everything's all good. We can move on. Again, if you have questions, you just let me know. 1. All right, cool. All right, so with that being said, we'll move on to the foreign currencies. We call for higher prices for like the last couple of weeks, right? Once it got up into this, inverted this or reclaimed this fair value gap, respected the upper 25 to 50%, as you could see. 3 PDA rule got violated when it went up. All right. And then we pointed out this buy side here, and it's off to the races, right? So it went up there. Same thing with the euro, right? The euro has also dropped lower, went a little bit lower than I wanted it to. All they did was take out this low. And then this high that took the low there ended up becoming a target. So that's a bullish breaker, right? Drag that over. Still got relative equal highs. If you guys remember this green area in there, I'm not gonna get into it. It's too much to get into. I've expressed this ad nauseum for weeks, but we had this outline when we were down here as a possible target because it's what ICT calls a liquidity void. There's no liquidity in there. So although this was buy side and sell side and was somewhat being treated as a BPR, it's actually inefficient. So what they do, they had to drag it up there to balance out this piece of price delivery. Okay. So that ended up becoming a target, and we've been pulling for that ever since. And now price dropped lower and went higher. We assumed it was going to take these highs, and it looks like we ended up fully tagging it. So we were correct for yet another week as far as where we think price is going to go from the start of the week to the end of the week. So now that we have accumulation in here, we got to see how, the high here, low, higher high is going to be treated. We have sell side and buy side. If it's bullish, we're going to not want to go through this candle. So it could come down into that if it wants. Preferably, it doesn't want to do that. And we look to try to come and fill in a little bit more of this. It's really not much of an inefficiency anywhere. We do have the rest of this gap. If it's bullish, it's going to reuse this. So it looks like that may be something that we can keep our eyes on. Same thing with this. This is a high resistance liquidity pool because it's consolidated. So if this is going to continue with its market maker buy model delivery, we had one in here, we had a sell model in here, and we have a buy model in here. So if it is going to continue that, we want to see this high to that low get respected. That's a balanced price range. That's a market maker buy model completion. So the upper 25% from the high to the low needs to be respected. We don't want to see it come back to the midpoint or even try. And then we want to see if we can get price to come up there as a result. We don't want to lose this low. You want to think of 3 PD arrays. Going back to what I said a second ago, you want to also map out the previous low, previous high. That's your weekly high and low. So anything that it wants to do moving forward is going to have to get outside of one of those levels or both. Maybe it runs up, takes this, and then targets the low, right? Regardless, these two liquidity pools are the most significant for what's to come, and at least at the start of the week, because it has to break this before it gets to any of this or any of this, right? It's going to have to break this to get down there. So it's logical, given this is a higher time frame, to aim for those levels from the very start, at least on Monday and Tuesday, or Sunday, Monday, sometimes going into Tuesday if they're still available. Okay, and then anything else can be observed once we get away from those levels. But I think that we're going to try to attempt maybe one more time. Well, the dollar's going higher, right? So, well, wait, no, the dollar's not. It's going lower. So yeah, if the dollar keeps going lower like this, we'll see this continue to go up. I was thinking about the yields, the stupid Kraken correlation. But yeah, so everything stays the same. Gun to my head, I think that we'll continue this march higher. Levels of invalidation, we have a fair value gap. We have the high, low, higher high. That is a bullish breaker itself, giant breaker. So that's a PD array. But things in here can help us invalidate whether this is going to hold or not. We got down movement, so that's a balance. It should be a balanced price range or bullish order block. We have the fair value gap, and we have the swing low. So if this was to get through this low with displacement, that's enough for us to gauge whether this is going to be targeted or not, right? If it leaves that available, again, we have bullish order block here. It's respecting it. Upper 25 to 50%. Beautiful, right? With a fair value gap. And so that has led to displacement targeting the highs. So now our next objective may end up becoming this up here, but we have an order block, so that could be used as a target. Assuming that this wick here holds, the upper part of this balanced price range holds, and this order block here holds, this fair value gap holds. And if we do come down there, it just wicks through it, right? That would still be supportive of this holding and getting us up higher. So again, gun to my head, I want to see these levels get targeted. Invalidation, breaking through this fair value gap, this low, this down movement, and then even, if you wanted to wait a little bit further, you could wait for this order block too, the midpoint to get violated. Okay. So that's my thoughts on the currencies. And so now we'll move to the beautiful indices and see what we can pull from this as well. Okay, if we could pull this up to monthly chart. So we see that the wicks delivery here was followed up by the last month closing above the 50%. That's not indicative of price wanting to go lower on this month, right? For the S&P specifically. When it comes to this, if you guys have been here for a while, you guys know I have called this. I called that whole little area in there. Do you guys remember how I said this is all it's going to be permitted to go into if we were to go lower, right? I said I don't want to see it go beyond this. Preferably it stays up a little bit higher in it, in that fair value gap. And look at what we did. We traded into this, and then the response closed well above it into this gap. And so all of that has led from our analysis, things that we've outlined ahead of time before the fact, it's led to now price going higher. I also mapped out the SMT in here the other week. I was telling you guys, watch the SMT in here. This is a big drop, but we're at a PD array and we have SMT. So I wouldn't be surprised if the dollar starts to go lower, which it ended up doing. I wouldn't be surprised if this bottoms out and tries to reach higher once more. And obviously we see that that's happened. We also see now market maker buy models unfolded. We've mapped this out for weeks. I see SMT at the highs, but with dollar going lower, if that's what it's going to continue to do, we'll continue to see this thing go higher. This down movement, up movement should act as a BPR. We got the market maker buy model in here. Okay. Shoot. See, I think that the NASDAQ, I think we could still continue to go up. Right? We called for all of this. If you guys remember, if you've been with me for the last couple of weeks, did we not call these moves to go higher up into these levels since we were over here? Did we not outline this as it was forming and say it should hold? Right? Did we not talk about this wick here being traded into? That respect creates a likelihood of these equal highs getting taken. Did we not say that? We just pull up the videos, right? We've been in line completely. We have down movement, up movement. Price comes down into that, sell side to buy side delivery. We've respected it. So higher highs, higher lows. Well, I guess we had like a lower high here, but nonetheless, that's set up low resistance liquidity even further. And the price came down, hit the order block right there, and the consecutive along with this. This is something interesting. A lot of you guys may not know this. This PD array here with the volume imbalance, this right here is ICT's Indigo model, which is a fair value gap with an order block, or not a fair value gap, volume imbalance, coupled with a order block. And when price runs down into it, that's the Indigo PD array. It's a variation of the order block. Right? So you could see that PD array held up as well. So we'll see this continue. So I believe that this high to that low, that is a balanced price range. So let me actually clean this up a little bit. Oh, it takes some of that out. Okay, let me put it right there. So that should be able to act as a BPR, you guys. Okay, so this is that level. So what else do we got in there? It's really, really sloppy in this range, unfortunately. But nonetheless, we have accumulation here. So buy side to sell side. This is inside that range. So this up candle right there is pretty significant to me. It seems like it's being significant in this too. Okay. So yeah, with that being said, I think if we go to the 2-day chart, it had this full order block. So that's actually a better lens, more clear. Actually remove that now. Gotta clean some of this up a little bit. So we can clearly see this up candle here. Saw it on the daily chart too. Let's see the weekly. So yeah, we got this weekly accumulation to distribution now. So we don't want to see it get outside of this. I guess that green box was accurate enough. We could keep that. Go to the weekly chart though. We can also see that volume imbalance. So we could use that as well. This is a further supportive idea. Remember, if we're trying to see this go higher, what levels on the left side can be analyzed and utilized as a gripping point as we look to climb this ladder up to these equal highs up here? What needs to happen? Well, we're going to have to see these levels that were once buy side that led to sell side that were respected now turn to buy side, sell side support, or accumulation to distribution in the market maker buy model. Same thing with levels like this. It's trading through them. When it comes down, I'd like to see it respect it. It could trade a little bit through it. Volume imbalances have a tendency to go back and forth a lot. But nonetheless, if we're going to see this continue to gravitate, I'd like to see that hold. We actually have... We have this wick that I'm kind of wanting to look at. So we go to the daily chart. Drag that over there. Okay, so that is, was it the weekly? Is it the weekly order block? Or the weekly fair value gap? Or a wick? Was it a weekly wick? Yeah. So we'll see how that is utilized. Go to the daily chart. Yeah, there it is. Okay. So you can notice that we're right in the middle of that weekly wick midpoint. We're also at that volume imbalance. We also have buy side, sell side, buy side. So that should be a BPR. We're also in the market maker buy model. So my line in the sand to turn this off is if we break this low. Why? Because we'll have, this was the, so we have the higher time frame market maker buy model idea. Actually, I think we could just remove that because we already have this as a BPR. That's all we're really using it to identify, right? This is a good example of not needing every PD array. If there's enough to support what it is you're looking at, you really don't need to add so much. But we have this wick here, midpoint. We have weekly volume imbalance, balanced price range, bullish order block, right? The 2-day bullish order block. And price is meeting us in that area. So that's a very sensitive level. It's going to have to make a choice. Is it going to break down, take this out, and then start to go lower? Is it going to, just stay stuck in this area because it's so congested? Or are we going to rally up and look to target our 40-day high? These equal highs here was a 20-day look back high position, right? A high liquidity from ICT's 20, 40, 60-day look back cast forward idea. I went into great detail about that, explained it, how to use it, how I use it. So obviously 20-day was short term, got targeted. So the next objective could be this high because that's exactly 40 days from the start of August backwards. Okay, so you could see these highs up here too. What the hell? And then we got 60-day up here as well. I think it's more so over here, but these are equal highs. So I'm using that. So that's a more longer term target, intermediate term target. Looks like we'll be able to get up there in the framework of a market maker buy model. We do see that there's somewhat of a correlation problem. So we have to keep a lookout on that. So we'll see what it wants to do. See what it wants to do. We had a type 2 dealing range in here. See that markup right there? What's a type 2 dealing range? High, low, with a failure swing. When price breaks above this high that was part of the failure swing, right? The high of the failure swing right here. Once it breaks that, it's very likely, let's say like 90% of the time, this high is going to be taken out, especially if your narrative is, in this case, bullish on this higher time frame. This is a fractal idea. So if I'm bullish on the higher time frame daily chart and I'm on the 1 minute and we're inside the kill zone and we're hitting some type of PD array, and I all of a sudden see a displacement lower, sets a low, creates a failure swing, and then we displace above this high here, low-hanging fruit target is this, right? So if this was like a 5-minute chart, this high would be very low-hanging fruit, confirmed by once we take this high out, with also the higher time frame being bullish. So that's a type 2 dealing range. So it looks like we're utilizing that, coming down into this wick now. So we'll see how this wick wants to be treated. We're inside this wick for the NASDAQ, and we're inside this fair value gap that isn't going to really necessarily need this whole gap to be traded through. I wouldn't want to see that really if we're still bullish for the Dow, because we already got a big wick up here. We have sell side to buy side delivery. So if it's going to keep going higher, it's going to have to stop. We don't want to see it blow out the entire thing. If it does, it's a little questionable, little sketch, okay? If I do say so myself. So we'll see. But yeah. So other than that, we outlined what I want to see happen. Important key levels, liquidity, like I talked about in the other asset, use the weekly low, weekly high. Those are two very relevant near-term liquidity pools. So before it gets up into here, it's going to have to take that out. Before it gets down into these levels, it's going to have to take that low out, right? I'm sure you guys would agree with that, right? It's just kind of the way it is. Before the next daily candle or the daily delivery starts to deliver up here, or when it looks to go up there, this is in its crosshair. It's going to have to breach that. So one daily candle can be framed in one daily range to get us up above, say, the previous day's high. And you guys have looked at the daily range a lot, hopefully. So you guys know there's a lot of opportunity inside a one daily range candle. So that's why this level is significant, because you could think every day has a daily range. So that means every day there's a daily high, daily low that you could reach for, or stuff from the last 3 days, or even something that was from a long time ago, like this high, right? That's a daily high, is it not? There's liquidity above that. And if we're bullish, very low hanging fruit targets are things like this, right? So what else? We got our PD arrays. We got our near-term liquidity. Got our longer-term liquidity. Got our validation levels. I think that'll just about do it then. Actually, I think I covered everything. Let me know in the chat if everything is clear. Are you walking away from today knowing what we're looking for in price? Did you learn something? Did you get value? If you did get value, don't forget to like the video, subscribe to the channel. But just let me know in the chat. Throw a 1 if you got value, if you learned some stuff, if you understand what we've talked about and we're able to follow along. I'd appreciate seeing that feedback. If you guys could send me that. Okay, appreciate you, elders. So hopefully you guys feel your time was well spent here, but I think that just about wraps it up. Again, if you guys have any questions at any point, just let me know. I appreciate you guys that engaged and went back and forth and asked questions. Again, it's part of what makes these calls very, very useful. Okay, it really helps you guys, along with, helping others, because maybe you're asking a question that others aren't confident enough in themselves to ask. you know so any question is useful. um, no question is stupid, whether it's publicly or privately given. So just know that. If you're brand new, just give us some time. I'm here to answer any questions. We do this every week, every day in my private group, but doing this on YouTube, we do it every week, twice a week. And I have a marathon that I run every second week of the month, where I go live Sunday, Tuesday, Wednesday, Thursday. So you guys get to see a little bit more in terms of what I do and how we can, in fact, go into the market every single day and find something that can offer profitability. Doesn't mean you'll be profitable. Doesn't mean you'll be able to take it. Just because we're able to find something doesn't mean that translates to monetary gain, but it definitely gives you the opportunity. Okay. So yeah, with that being said, if there's no other questions or anything, again, I hope you got value. Thank you guys yet again for all the love and support. I'm grateful to see you guys improving. It's my pleasure to be able to sit here and do this. It's a privilege for me to be able to do this, and I couldn't be more grateful. So I appreciate you just as much as you appreciate me and show appreciation. But again, if you guys could do me a favor and like the video, subscribe to the channel, maybe even tell a friend that trades, if you think that they can get value from these types of conversations. We do it every week. The goal here is to get you to be, to progress, right? To get you to have the right mindset, to get you the right tools, so then eventually you don't have to depend on anyone, and you can walk on your own. And at the core of everything, that's the whole goal here. The whole ethos of what I do here is to teach you so then you could be independent. And so you can finally, whether you're new or have been here for a while, get your trading to go from confusion to clarity, right? So yeah, with that being said, God bless. Appreciate y'all. Let me know if you have any questions. If you need anything, I'll be available a little bit later. Just shoot me a DM or a comment, and I'll make sure to get back to you, okay? So with that being said, God bless you guys. We'll be live again on Tuesday. There's no news, so we'll probably be live around maybe 6, unless, I have a lot of people that want to hop on a little bit earlier. In that case, then we'll just hop on at like 5 something. But there's no news, so we're not going to engage until after 6:30 a.m. Pacific Standard Time. I'm on the West Coast, right? So yeah, just keep that in mind for this week's schedule, everybody, okay? So again, God bless. Hope you have a good weekend, and I'll catch you beautiful people on the next one. Take care, you guys.